Howdy. Welcome back to Dion Talk. So, my live streams start at 4 p.m. Pacific. Thank you for being here. If you're watching this in the future, it's every Tuesday, 4 p.m. I try to go as long as the questions last. So, most nights, that's about 3 hours. 1 week of the month, I have a local REI meetup where I have to leave a little early. That'll be next week. So, not today, but not today. Next week, I'll have to be leaving a little bit early. So what I'm going to do is talk for a few minutes about the topic of this video, which is the real estate order of operations. An order of operations means, really simple terms, in what order do we perform tasks to have the best likelihood of success? And yes, as someone pointed out in the chat, it's something that I've held on to from my military days. One thing I really like is the acronyms in the military when you can apply them to something you're going to do, whether you're in the military or not. And for me, order of operations is great. I really like the Air Force's OODA loop. Observe, orient, decide, act. Repeat, observe, orient, decide, act. Real estate is a lot like that. You learn your market, you observe what's going on, you orient to decide what you want to do, and then you actually have to take action. So in the order of operations for real estate, there are different aspects of real estate investing that have an order of operations. I'm going to cover the one that matters to most of us, that pretty much all of us have to go through, is how do I start? And then I'm going to cover some like, what is the order of operations for lending? What is the order of operations for screening and selecting and placing tenants? But to go from how do I start investing, there is an order of operations, and it literally has the steps like 1, 2, 3, 4, 5, 6. The first step, and this is why I said pretty much all of us have to figure out this first order of operations, because if you save up cash and you purchase your properties in all cash and you never take out a home equity line of credit and you never do a cash out refinance, you don't need to learn the order of operations for lending. So there are some aspects of investing that you don't have to take the mental bandwidth to commit the memory to learning. But starting in real estate is something that pretty much hits all of us, except for a rare few who might be born into it. Step 1 in the order of operations, because if you don't do this first, most of the other steps aren't going to help you at all, is learning how to save, figuring out how to live on less than what we make. And when it comes to saving, there's actually an order of operations inside that subset. So if you make a certain amount of money and you spend less, you have to think, do I have debt? If I have debt, putting money in the bank account doesn't make much sense because you've got to pay off the debt. This is one thing that I'm a little confused at, because I actually agree with Dave Ramsey. I think the order of operations for saving should be starting with an emergency fund, $1,000 to $2,000 because of inflation. His first baby step, I'm doubling it to $2,000 instead of just $1,000, so that you can handle the mistakes that are going to pop up. You're going to have a flat tire, windows are going to break, something is going to happen, you're going to drop your phone, some emergency, and it's some large percentage, like 40% of Americans can't handle a $400 expense without going into some form of debt, like using a credit card. So having that first savings of $1,000 to $2,000 in an emergency fund is step 1 in the order of operations of saving, because there's the order of operations for investing, but the first step is saving. So when we look at, we've got our emergency fund, I like to look at the debt. And the way I did it was anything that had 6% or higher interest rate, I considered a high interest rate. And the best use of my money was focusing to pay that off, because I was getting a better return than I would get with my money sitting in a bank or with my money sitting in most properties. Because I shoot for, in my buy and hold real estate investing, for a 10% cash on cash return. But it's not guaranteed. If you pay down a credit card debt that has a 12% interest rate, that is a guaranteed 12% interest rate of return, because you're not going to be paying that interest. Debts that are 6% or below, I wouldn't focus on paying off fast. I'm going to be making a video soon, but not today, on how I would never pay off a home mortgage, unless I had one that was a rate above 6%. I would never pay it off early. I would make the payments, but I would never focus on paying it off sooner than the 30-year amortization. So in the savings order of operations, get that emergency fund, focus on debts over 6%. I split this because I wanted to focus on house hacking. I wanted to reduce or eliminate my largest expense. So that's where you buy a place and have roommates, or you buy a duplex, triplex, or fourplex. live in one unit and rent out the others. So I was taking half of my extra income. I say extra, like money that wasn't absolutely needed to survive. Half of that went to paying all debts over 6%. The other half went into a savings to build the down payment for a purchase on my first investment property. So I split that. The money was being saved to pay off the debt, which increased my savings, and saving for that house hack, which would really increase my savings because I was able, with my first duplex, to add $1,200 a month to my savings rate, which at the time I wasn't making a lot of money. That was a huge increase. I mean, that was multiples of what my monthly savings rate was. So that's the saving. Get the emergency fund, focus on the large debt, then save for investing. In the beginning, in those first 4 to 6 years, when we're getting into real estate investing, in my order of operations, I did not focus to pay off the debts that were below 6% interest. I wanted to wait until the income snowball kicked in, and that didn't happen until about between the 4 and 6 year mark. The income snowball is when cash flow from your cash flowing assets starts to pile up. And it starts to become easier to pay off debt. It starts to become easier to save. So my focus, instead of getting rid of debt, I just paid the minimum payments for once I got down to everything was 6% or less. I focused on saving every penny I could for the next investment. So I was saving the down payments so that as I got a couple of cash flowing properties, I would then have extra cash flow to either put towards saving for the next deal or paying off the debt. It's a lot easier once you have the cash flow coming from sources you don't have to work for. If you're new to my channel, thanks for coming to my live stream. But one of my purposes the purpose of my content is to help the average individual realize that you can reach financial freedom and make work optional in 10 years or less, even if you're not starting from the best position. So that's the whole goal of my content. And so in the order of operations, my goal is, if you do this in the right order that makes sense for you, some of the things later on in the order of operations might change based on your situation. Like I said, if you save up cash to invest, you're not going to need to learn the order of operations for lending. If you're a real estate agent, that's going to change how you hunt and screen for real estate agents. So we're learning how to save. The second step that we start working on simultaneously at the same time as the first step. So order of operations, these are the first 2 steps. And though I talk about them in like a linear fashion, you're doing them at the same time. Second step is you work on your credit score. The goal should be to get your credit score to 740 or higher so that you get the best interest rates and best rates on your loans and the most likelihood to actually qualify for lending. But that's the goal. That doesn't mean if you don't have a 740 credit score that you shouldn't start investing. If you're going to do a house hack, which I did, my credit score was not 740 when I got my first place. I think it was 6 something. It wasn't even in the 700s. Conventional loans will lend. I like to do residential loans, so 4 units or less, so fourplex, triplex, duplex, or single family house, because you get 30-year fixed rate debt with no adjustable rate mortgage, no loan revaluation period. If you go for conventional loans or commercial loans, which is 5 units or more, or commercial loans on residential property exist too, then you might have an adjustable rate. You might have a loan revaluation period. But when you're focusing on your credit score, your order of operations is going to be different than the other person watching. If you have a credit score that's in the 500s, some people would say, oh, you probably shouldn't invest yet. And I think that's wrong. It's based on your situation. FHA loans, Federal Housing Authority loans, are designed to help people get on the property ladder. The powers that be, the government, understands that owning property is a really good asset class for everyone to be in. The average net worth of somebody who's owned a home when they reach the normal retirement age, which I have a problem with that being a normal age, is over $200,000. And the average net worth of a person who's been renting is $6,000. So just owning a house, your average net worth is over 200,000. Renting, it's around 6,000. So they're trying to get you on the property ladder because you have a better chance at actually being able to retire. So they lower the credit score into the 500s. So FHA can be used to acquire a house hack. Now, it doesn't mean first-time home buyer, but it does mean owner-occupied. You have to intend to live on the property for at least a year. Conventional loans have owner-occupied options too. If you've never owned a property in the last 3 years, you can get into it for 3% down. but it takes a little bit better credit score in the 600s, and it takes a lower debt to income ratio. So the debt to income ratio on FHA can also be worse. So you can have a lower credit score and a higher debt to income ratio and use that loan product long before you reach the 740, which is the goal. That's where you want to get to, but that doesn't mean it's where you're at. One thing I would like to say is I have a little bit of bartender information to share with investors. And if we get to 50 likes in the live stream while it's going as a live stream, I'm going to share that bartender information with you. And it should help you on at least your mindset for investing. So let me just make sure I'm not skipping anything here. It's going to take time to learn how to save, to change those daily habits. And a lot of people talk about the latte factor, eliminating small costs. I still think house hacking has a bigger impact because you reduce or eliminate your largest expense. So you learn how to save, you learn how to fix your credit. I had gone through a divorce, found out about a bunch of debt I didn't know until the divorce. I didn't even know it existed. So my credit score wasn't great when I was starting. That took time. And it took me a couple of years to save the down payment. In that time, it gave me time to educate myself. Do things like go on YouTube, which wasn't really a thing. I was going on dinosaur days. This was from 2010 to 2011. I wasn't really on YouTube much, but there were blogs, not vlogs, not video logs, but blogs where people would write up concepts on investing, on real estate, on financial freedom, early days. But I was educating myself, and what you want to do is pick a strategy. So order of operations, save, credit score, pick a strategy. We can be a couple of years into our investing strategy and we haven't talked to a lender. We haven't talked to a real estate agent. We haven't set up auto searches. We haven't even done all of those things that people get really worried about in the beginning that you need to do, because we need to focus on the things that are going to actually impact our ability to invest: saving, credit score, and then deciding on that strategy. Your strategy, and this is going to draw a little bit from my law enforcement background. I was a police officer until 2008 when the recession hit. When there's no taxes coming in, police departments shrink. So I got laid off with a bunch of qualified officers. But when I was a police officer, I use this concept in real estate investing. A police officer can't come up to a crime scene. And I was in a small department. So if you're in a large department, most patrol officers don't get to think this way at all. You're going from call to call to call to call. But my department had a whole whopping 24 officers. So while we had a couple of detectives, you pretty much handled everything start to finish on every call that you got. You can't show up on the scene and think, okay, this is what I think happened. Now let me find the evidence to support my decision. Real estate is the same way. You can't think, I want to buy in single family homes with 3 bedrooms and 2 bathrooms and rent out to traveling nurses in this footprint. What if that hospital doesn't have that program? What if that city doesn't let more than 2 people that aren't related live in the same structure? What are the rules there? So a police officer shows up on the scene, looks at the evidence, and then tries to write a report based on what they think happened. And as they find new evidence, your opinion has to shift. You have to be able to base your decision on the evidence at the time you are writing the report. So evidence can change, your opinion has to change. You're looking at a market, something can change. I looked at my market and I had that initial strategy. I wanted to, because I had a single family house. I moved into an apartment, rented out my house. First year was terrible. Second year, I figured it out. But I was in an apartment and I was thinking, I can rinse and repeat this with an owner occupied loan once every year for 10 years. I'd have 10 rentals. And if the cash flow was $300, $400, $500 from each one, I never have to work again in my life. Had the whole thing laid out, right? I've never seen, and since I've been an investor in my area, not one single family house that would cash flow $1, let alone $400 or $500. So I had to look at the evidence. In my area, small multifamily cash flow. And there are some areas, like a friend who invests in Ohio, single family cash flow is better than small multifamily in the area that she's investing. So figure out what works in that market and then pick a strategy that will actually work there. And in whatever market you're in, somebody is investing there successfully. If you're in a really high cost of living, expensive area, and somebody's living there, they could be investing at a distance. That is still investing from where they live successfully. They just picked a different market. So picking that strategy is things like, are you going to invest in small multifamily, single family, residential, 4 units or less, or commercial 5 units or more, so large apartment complexes? Are you going to do self-storage units? Are you going to do bare land, RV pads, mobile home parks, local, at a distance? Is your strategy going to be buy and hold like mine forever? I plan on not ever selling a property. That's my actual goal. And my kids will inherit millions of dollars in rental properties, and then it's up to them what they want to do with it. Are you going to do what Kris Krohn suggests, where you buy a property, you keep it for about 7 years, you then sell, preferably with an owner financed to the tenant, what they call lease to own, so that you're getting a higher payment, but you don't have any of the headaches of owning the property. You're selling at the 7-year mark, so all of the problems with the property, the capex expenditures that are going to come up, become the new owners, and you have the cash flow from it. There are several different strategies, and once you pick one, you also need to include the footprint, which in business terms is where are you going to invest. If it's going to be local, how local? I would go basically an hour in any direction, but I carve out King County. King County is a black hole that I would never invest in, so I have a clear arc around it. I know people who successfully invest in King County. It's just not the type of place I want to invest. So what does your footprint look like? If it's at a distance, I did a live stream a few weeks ago on how to select a market. So if you're going to be investing at a distance, I have all this order of operations on how you select a market at a distance. So that's your strategy that you're going to be picking. When we're looking at our strategy, I like small multifamily buy and hold investing with long-term tenants. So I don't do short-term Airbnb, VRBO, traveling nurses. I don't rent by the room. I'm the lazy investor. I find a tenant, screen a tenant, place a tenant, try to keep the tenant happy, try to keep my rents below area average so the tenants are happy. I allow pets to help limit tenant turnover. So that's my strategy. Super lazy investing. But you need to think about, when you're picking your strategy, what is your exit strategy? Because if you know your exit strategy, it helps you make decisions in the beginning when you're first starting out. So the order of operations that we're at right now: save, credit score, pick a strategy. And part of your strategy is understanding not only how you're going to start and what you're beginning, like in chess, your begin game, mid game, and end game. If you plan them out, it makes those first decisions a lot easier. If your plan is to sell in 7 years, you're definitely going to be looking at migration trends. Where is U-Haul having all of their trucks move? Where is population growing? You're going to be more concerned with that than in mine. I'm not really looking at population growth. I don't even know what it is in my areas, if it's gone up or down. I'm looking at multiple economic drivers. Since I'm buy and hold for a long term, as long as I'm going to live, which, I'm going to die someday, but not today, hopefully. I want several economic drivers: a base, a port, a college, Boeing, Amazon, large companies, so that several massive things would have to change for the rents in my area to go down. I don't care about property values. I would actually like them to go down, even the ones that I already own. We talk about net worth a little bit because it makes a video, but I didn't know my net worth until I looked it up, like did the math for a video. I'm worried about cash flow from rentals. So that's my end game, is to keep it and hope that there's enough economic drivers to always have a steady supply of tenants from more than one source, so that my rents have competition, so that they stay high enough to make it a profitable business. So you need to look at what is your exit strategy going to be, especially if you are flipping or wholesaling, because that type of investing or work is a job. It's episodical. You stop wholesaling and you stop flipping, the money stops coming in. So what are you going to do with the money that you made? A lot of people think, I'm going to start that way in real estate so I can generate the capital. Well, that's phase one for that. What are you going to do with it that gives you an exit strategy? Okay, so I'm looking to make sure I don't forget anything here. So save, credit score, pick a strategy. Now we're going to talk to a lender. You definitely want to talk to a lender before you talk to a real estate agent. There's actually agents out there who will ask you, have you spoken with a lender yet? And if you haven't, they'll say, well, I'm not going to talk to you until you do, because it's really a waste of their time. Even setting up auto searches that could be outside the realm of what you're able to borrow for is more work than they need to do. And they're definitely not going to want to take their time to show you houses when you don't even know if you can buy that type of house yet. So you talk to a lender, and this will help you adjust your strategy. When you find out that in certain areas, owner-occupied FHA loans have a limit to how much you can borrow. And yes, in November of 2021, those limits went up. So you want to find out from the lender, if you're going to use an FHA to owner-occupy, what are my limits? Because that helps you set your search. It doesn't matter how much of a down payment you have if that's the limit for FHA, if that's the route you have to go. Outside of that, the lenders are going to look at a few things: your debt to income ratio, your credit score, your salary, how much you actually make a year, whether it's hourly or sourly. Sourly? That's not a word. Words are hard. If you have a salary or hourly pay, and some of it is based on overtime, but you haven't consistently got overtime for a couple of years, they might not factor that in your income. So they're actually going to look at work history. And it doesn't mean you have to work at the same place for at least 2 years. It means you have to work in the same industry. So if you're a truck driver and you've worked at 3 different companies, they're going to look at that truck driving income. If you were a truck driver for the last 2 years and you just last month became an IT specialist, and this is your first month working in that field, that's reset your work history for that for most lenders. There are ways around a bad debt to income ratio, a bad credit score, and a work history that doesn't look attractive to lenders. Things like non-QM loans, asset-based lending, or seller financing. And there's probably a couple I'm forgetting, but there are strategies to invest in real estate if you have other barriers. There are also ways to do this where, like I talked about earlier, where you can invest with cash. You can, and I don't mean using hard money to make an all cash offer. That's a way to make your offer look attractive when you're looking at real estate. But you can actually save up the cash, like Dave Ramsey suggests, and buy it without a mortgage. This generally would work for somebody who has a really high income, several $100,000, multiple 6 figures, or recently ran into a large sum of money from an inheritance or lottery, and somebody who has patience. It's going to, if you, even with the high income, to save the money for the down payment, it takes patience. That's not always the best return on your money, though, because now you're only gaining appreciation on the amount of money that you put into it. Whereas if you save up a 20% down payment, like I like to do, or 25 when it's required, I'm getting appreciation on 4 times what I invest in that property. So pick the one that works best for you. That's the cool thing about real estate, is there is no one right way, but there is a one right way for you. Your order of operations, the first couple of steps might look kind of similar, but after that, we're all going to branch out into the one that makes the most sense to us based on the strategy we picked and the market that we're in. Okay. So before I talk about the next step, which is getting to your agent, your real estate agent, is there's an order of operations inside lending. This is how it looks for me. I want to go to a large bank, Bank of America, Wells Fargo. I start there. That's in the beginning. They actually were the ones that kept my business, but since then they haven't been able to. I use the large banks because their criteria, their screening criteria, is the most standardized. The amount that they say that you're qualified for is generally going to be at least the amount that most other lenders will lend to you. Some will even lend more than the large institutions. So I find out what my limits are, what my interest rate is going to be, and I get that in writing. So then I start making offers on my properties. So this will be, I know my footprint, I know my strategy. And once I've talked to and I've got an agent, I have my auto searches set up, the order of operations, and this is the same still in year 10 as it was in year 2. Talk to a lender, get pre-qualified, make your offers. If you're pre-qualified for $500,000 and you find a duplex for $400,000, you don't submit a letter that says you can borrow $500,000. You get another letter from the lender for $400,000 because you can borrow 5, so it's easy to get less. So you get a letter that day saying you are pre-qualified to borrow $400,000, and you submit it with your offer. This way, the listing agent knows that you are able to pay the amount that you've offered. I wouldn't want them to know that I could have paid another $100,000. That was what I was qualified for. But I want that lender there. Once I have an offer accepted, so I don't talk to other lenders until I have an offer accepted, because I usually make 20 or more offers before one gets accepted, especially in a seller's market like we find ourselves now. So I have the letter from the bank. I finally get an offer accepted on the property that I like after all the offers that I've made. That second that I find out, I reach out to my other lenders. And in the beginning, I would use a local credit union, never had good luck with them. But I would check with Guild Mortgage, Fairway Mortgage. And now Matt, the mortgage guy, has a team that I will check in with. If they see in writing the offer from the large bank, the large institution, and they can beat it, either better interest rate or better fees, such as one said, well, our buy down, the interest rate is half what that bank is charging. So your fees can be better, your rate can be better. If you're using commercial lending, your terms can be better. When is the loan reevaluation period? Is it a 5, 7, or 10 ARM, or whatever aspect that they can beat the bank with? And to be fair to the first lender, I take the new offer, if one of them beat it, and in the first couple of years of investing, other lenders weren't beating Wells Fargo. So Wells Fargo got my first 3 mortgages. Since then, all of my mortgages have gone to Fairway Mortgage, and 2 refinances went to them because they were able to beat it. I take their offer in writing back to the bank and I say, look, if you'd like to keep my business, this is the interest rate you need to beat. So that's the order of operations for lending. You get it pre-approved, you get an offer accepted, you check with other lenders, you show the first lender, and then you go with the one out of the entire group of 3 to 5 lenders that you're talking to that has the best rate and terms. This seems like a lot of work. It's never been more than maybe, I think the worst would have been one time it was probably 10 emails. Normally it's about 4 or 5 emails. That's it. 4 or 5 emails to save tens of thousands of dollars over 30 years. Think about this. This confuses me a little. Somebody wants to put in a $5,000 deck. They call 3 contractors and they get quotes, right? You're going to make a 30-year commitment for several hundreds of thousands of dollars, and 5 emails to get a few quotes is what stops people from doing it. So if we're going to do that for the smaller $5,000 project, I definitely recommend doing it for big things like a mortgage. So that's the order of operations for lending. Then we get to your agent. I would want an agent that's local to the area. I don't care if the agent is, you need to figure out what's important to you for your agent. Is it knowledge? Because our agent and our lender is not a mentor. You should not be looking to them for information on investing. I think it's like over 90% of real estate agents never own one rental property. So investors aren't communicating in the same language. A lender's job is to sell you a loan product. A real estate agent's job is to complete transactions. That's how they earn their money. So I don't care if the agent is an investor or not. I've worked with both. And my first agent that I worked with was a successful investor, over 30 units, ran a department with a bunch of agents working for him. And his advice would have bankrupted me because he invested in a time when the prices were different. He invested in single family when they made sense, and a decade before me. And his investing strategy, he had never done small multifamily. He didn't understand it. And he gave me advice that would have really hurt me. So don't look to the agent for advice. I look for an agent who knows their business. Is their offer professional? Do they work for a brokerage that has DocuSign? So I can do everything on my phone in a few seconds and get an offer submitted fast. How responsive are they? Because when it comes to making offers, which comes later in the order of operations, speed is important. I need a lender who will get me that letter of pre-qualification for the amount that I need in less than 20 minutes, or I'm going to another lender. And then I need an agent who responds. And when I find the property that meets my criteria, I've been investing for over 10 years now. It's like day one. When I see one, because I study my market, I know my area, and I know this is a good deal, the adrenaline goes up, the heart rate goes up, like the heart comes up into my throat, and I'm like, text, call, email, get every way I can get a hold of that agent to get the offer submitted quickly. Because in a seller's market, one of the biggest things that you can do to make an offer look attractive is to be there first. As investors, we think, if I'm going to sell my property, here's how I'm going to do it. Get an agent. I'm going to list it on the MLS, probably going to put it on Zillow and Redfin and everywhere I can get as many eyes on it as possible. I'm going to sit back for 5 to 10 days and I'm going to watch the offers roll in, and I'm going to look through to find the strongest with the best, most likely to close, and probably going to make the most amount of money. That's an investor's mind. Sellers are, I bought this property 30 years ago for $100,000. I can't believe people are paying $600,000 for a duplex right now. That's ridiculous. So I'm going to list it for $600,000 with an agent, but I think the agent is pulling my leg and just hoping for a number. And then the offer comes in and they go, oh my God, I can't believe somebody's going to pay that much for my property. I better take that before it goes away, before they retract that offer, because it was official in a real format from a brokerage. And they're just excited to get the amount that they were looking for. Let me see. I don't know that I've ever paid over asking for a property, even in the current market, but speed. And I have offered higher earnest money because some sellers are looking at earnest money like free money. The mindset of the seller, because remember, they're not all investors. Some of them inherited the property recently and it's going through probate, or they got into real investing and don't like it. They're looking at earnest money like if you back out, they get to keep it. So if you make a $10,000 or a $15,000 earnest money deposit, but you still have an appraisal contingency and an inspection contingency, some sellers will jump on that over an all cash offer if their earnest money is less. I don't recommend waiving contingencies. And if you have the money to cover the gap on an appraisal, Sure, that meant that you had the money. I would not waive the inspection contingency, not because I want an inspection of the property. I know that I can go in and fix pretty much anything, and it'll just have a cost associated with it. I want that inspection, period, part of the clause. There's a number of days, 5 to 10 days, whatever you get to set it in your inspection clause that you add to your offer, of 5 to 10 days to go and look at the area, or have your boots on the ground go and look in the area if you're investing in a distance. Is it on a noisy street? Do train tracks go right through the middle of the property? Is it mostly wetland? Is it something in that area that would make you not want it? And then back out without risk of losing your earnest money. As an investor, there is an order of operations with agents too. Finding agents that you are responsive, they meet your criteria, whether it is they've been investing for a while, they've been an agent for a while, and if it's a new agent and they're brand new, which I've worked with a brand new agent who's been doing it now 4 or 5 years, and I've done 3 deals with him, and they've been amazing. My question was, tell me a little bit about your brokerage. Do you have a mentor? Do you have an agent that's been there longer that can come to you when you don't know because you're brand new? And he did. So I was able to get past the brand new agent fear. So you screen your agent to have it. My order of operations is to do that at least 3 times. Even if I was an agent with access to the MLS, I would have 3 agents with auto searches set up. Searching on the MLS is nuanced. I have an email, copy and paste. This is what I'm looking for in this footprint with this criteria, with this price range. I send it to the agents to set up the auto search. And in over 10 years, now of investing, agents have sent me the same deal within a 24-hour period once. Somehow, when people search on the MLS and set up those auto searches, they're using something different that agent, if it's on the MLS for 2 weeks, everybody's going to see it. But I want to know in hours, so I can make an offer that day, like Matt, the lumberjack landlord, did recently, where he made it. I found it on a Saturday and he was under contract by 9 o'clock at night. That's what I'm looking to do. And pretty much every deal I've gotten has been that way. Find it, offer, contract the same day. There have been some cases where, and I'll cover the order of operations on an offer after the agent, and then we're about ready to wrap up and get to the questions. Because my goal is that the intro to my live streams is 10 minutes. We're at 32 minutes. So this is why I edit. I can talk too long, for too much, forever. In October, I'm going to be a guest speaker at the BiggerPockets conference this year, whenever they pick the location for it. And I'm going to have to actually set timers on my phone to say, okay, you're halfway through, you're 45 minutes, whatever percent through, be ready to wrap up. Because I don't think I'll control the floor there the way I can here. So that the order of operations on agents is to have at least 3 of them. So I've screened them, but I've done it to where I have at least 3 that I'll work with auto searches set up. An agent, if they're working with a home buyer, is not going to want to do this, because a home buyer is going to ask a bunch of questions, go and look at properties, and take up a bunch of the agent's time. So it totally makes sense for that agent to sign an exclusivity clause where that buyer will work with that agent while they're doing all this work. As an investor, I'm not taking up any of their time. I go, here's the email, set up the auto search. It'll take you 5, 10, 20 minutes, however your skill set is. And then you're not going to hear from me again until your auto search sends me the place that I like. Whoever sends me the place that I like is the agent that's going to get the work. So I send that agent the email to set it up. I explain this to the agents and give them the opportunity to say, I'm okay with that, or no, I'm a monogamous agent. Is that a word? So they only work with one person. I've never had an agent say no. They say, all you want is an auto search, and that's it. And that's why, but once we make an offer, if they have an agreement for that offer, yeah, I'll absolutely send it. I just did that with an agent on my last offer that I made, I don't know, 3 or 4 days ago now. Signed a thing that for this deal on this property, you're the agent I'm going to work with. I'm totally fine with that. But I wouldn't want an exclusivity clause with one agent because I want multiple searches set up. So after your agent, we need to actually do the work. You need to look at the auto searches when they come in and make offers, know what is a good deal, know the area average rents, know how to figure out what your mortgage is going to be, figuring out cash flow, how much are you going to set aside for repairs, capex, maintenance, property management if you're going to have it, understanding the math and educating yourself so that you can actually do the work and make offers when the right deal comes across your search. The order of operations for an offer, since we're at the 32-minute mark, is going to be a part of next week's live stream. And next week's live stream is actually going to be the timeline of buying a rental, before, during, and after. So I'm going to cover making an offer, before you buy a rental, the order of operations for that, what happens during the closing period, and then what do you do immediately after? All of a sudden you own a new property. Is it vacant? Does it have tenants? And the order of operations on that's what a purchase went like from before, during, and after. That is my order of operations. And at some point in the future, but not today, I'm going to cut this section out of my live stream and make a video, a standalone video. So don't leave. I'm about to give an outro. The outro is just for that video. I hope my order of operations helps you at least get started on your journey or narrow down what you need to do next. Until my next video, thanks for coming to my Dion Talk. And then the number you have dialed is still in service. I'm going to go up here and start saying hi to everybody. And there were some messages sent before the live stream started. So this is something I'm going to start talking about with the three amigos is Matt and I think Mike has done it a couple of times. Michael Zuber from One Rental at a Time has put our live streams up the day before so people can get set a reminder that it's coming. When we do that, you can start leaving messages. You can leave a question, and you don't have to wait for the live stream to start. So Chester, howdy. Order of operations, military lingo never quite leaves us even after becoming civilians again. Nope, it doesn't. A lot of things don't. Tom Kine, howdy. Let's go. What came first, the chicken or the egg? Jurassic Park changed how all that worked. Curmudgeon, howdy. Dawn May, howdy, and howdy everybody. Date night with Dawn. Stealing her words from last week. Stony Creek Softwash, howdy, checking in from Michigan. Tom Kine, hey all, glad to see you. Emma Fid, howdy. Glenn, howdy. Tom Kine, oh, this is going to be a good one to listen to multiple times. Awesome, good. And maybe in sections, because 32 minutes is long for a video. I do try to shoot for 10 minutes videos, but it's a little easier when I'm actually editing. Because even I sit back and go, that's a lot of information. The goal when you're teaching something is the average human mind can retain 3 facts. When you get a 4th fact, we don't lose the 4th one. We lose all 4. Kind of like if I said 3 numbers and then asked you in a minute, you would know those 3 numbers. But if I say 4 in a minute, we don't remember any of them usually. So in 10 minutes, we can get 3 points across. Walk by faith and budget. Howdy. I have 1 duplex that I live in and a roommate. Should I use TurboTax to file my taxes? The second I found out that there were multiple forms of depreciation, I hired a CPA. It'll be somewhere, your first year, usually between $600 and $1,000. And then they're going to save you way more than that. Do TurboTax and then go tell a CPA, look, I want to give you a couple $100 to tell me what my tax number would be and compare it and see where you would show up. That would be an investment worth finding out. But scheduled, amortized bonus, like all the different types of depreciation, I don't want to take the time to learn what they mean or how they work unless someday I make a video on that topic, and then I'll take the time to learn it. But to run the business, never needed to know it. I needed to know that I had a professional who that's their job, figuring out the best way to legally have it so that in over 10 years, I've never paid a penny on rental income tax. Cameron, howdy. It's Jax. Howdy. My screen was a little small there. Ben Tipton, howdy. Nick Post, howdy. Dion, and so everybody knows if you're watching this in the future, the reason that I'm saying, or if you're watching it now, the reason I read every single thing is because a lot of people watch YouTube with the app closed. So I want to be able to read the questions. And I see that we're at 42 likes. That means we're really close to me being able to give the bartender knowledge on real estate investing. Nick Post, Dion, can you provide your seller financing letter? I'm having a hard time getting a deal. My terms are solid. It just seems everyone wants me to have some kind of down payment, even at over list price. I am going to put my email in the chat. I tried once before. My seller financing letter doesn't fit in the chat here during a live stream. And if I remember, I'll put it in the, the description of this video. I'll put it in there. But if you email me, Nick, I'll send it to you. Anybody watching, email me. I'll send you that seller financing letter. Julie Anderson, howdy. I just finished renovating another unit today. Nice. Congratulations. Hopefully those are going well. Materials are a little more affordable than they were. They're not quite back to where they were a year ago. I mean, I would expect some appreciation to go, but that's still more expensive than it's been. Ace, Grooms, howdy. Chester Williams, it's all about interest spreads, cash flow yield, less the percent interest, and cost to acquire an asset, net interest income. Yes, to me, it doesn't matter about the debt. It matters about, am I making more money than the debt is costing me? And preferably with real estate, is someone else paying the debt off? Angel R, howdy. These lives should be paid. I'm not. So somebody like a week or two ago said it was great to get content like this where we have this level of interaction, and at some point, if my channel ever got so big, we would lose this level of interaction. So I want to figure out a way that no matter how, if it gets big, the channel gets, how do we keep this level of interaction? Would it have to be more live streams or something? Pallavi, howdy. And howdy to everybody from freezing cold Illinois. Yeah, I'm going back to Idaho here in a little bit, and they just had another cold snap, so that's going to be fun. Chester, speaking of credit scores, do you know of anyone who has a credit score over 825 or the mythic 850? So mine was an 830. I have a Section 8 tenant with an 833. I think mine was 830 when I looked at hers, and I was like, oh, that's impressive. Mine hovers around a 790, and as it gets up, I find the next property that drops down, and so it's around that 780 to 800. I have a video coming out Thursday where I have LaForenzo come on, who was a 6-year Army vet who is running a company on credit repair. He has some advice on credit repair, and then his contact info, so you can actually reach out to him, because one thing I am not, this channel is not a channel that teaches how to fix or improve your credit score. If my credit score was 830, maintained consistently all the time, even when buying properties, yeah, then I'd feel confident. But one thing I really like about Michael Zuber is he knows what he knows from one rental at a time, and he knows what he doesn't know. You know, he took his information on how he reached financial freedom and put it in a book, one rental at a time. This is basically the walkthrough strategy of how I made work optional. But he's never self-managed, and he's never house hacked, and there's a few other things that he's not done. So in his course, Matt the Lumberjack Landlord comes in and teaches self-managing. I come in, or he teaches house hacking, I teach self-managing. We could probably have switched those roles around a bit. I don't know how to fix your credit. I know how to maintain mine pretty well. I could study and then make a video on it, but I can bring in somebody like LaForenzo who could just go, hey, here's how the industry works, and then here's his contact info, and you can reach out to him. So that'll be coming out Thursday. Jones, howdy. Missing tonight's episode, doing DoorDash. Nice. Okay, somebody's got to make the money, right? Chester, weblogs, blogs. Ah, nice. Weblogs equals blogs. Thank you. Basically an online journal. Andrew Wilkins, howdy. Jeff Kewer, my screen sucks. Clearer, howdy. What leverage percent or debt to equity ratio are you comfortable with? I'm contemplating a deal that would put me at 66% leveraged and debt to equity ratio of 2.3. Debating if that is a little too high. My ultimate goal is 70%. I want 70% leverage, 30% equity. That to me gives me the optimum sense of peace, where I think I can handle issues because I have 30% equity, and I'm gaining appreciation on a large amount of money, more than what I've invested. I'm hovering around 55 to 60%. I haven't done the actual math in the last couple of months because appreciation and principal pay down take actual math. I want to be around 70. So on a future deal, I might actually, do something like use my VA loan and do a 100% finance deal. Well, that one would be 100% finance. The overall portfolio would still be below 70% leveraged. So that would be, so if you're going to be at 66%, that's probably, I would be comfortable with that. And again, what is it? Read the disclaimer. This is for entertainment value and not for financial advice. That is just what I would be comfortable with. And I lost where I was in the chat. Here we go. Jeff, I know it's personal preference. Just wondering what your preference is. If anybody else in the comments wants to chime in, I'd be curious to know what other people think too. Bennett. Buy and hold for life. Exactly. John W. Howdy. What camera are you filming with? What is this? A Logitech Brio on Amazon, like $159. My videos, a lot of them were filmed on the iPhone 12 and then 13. But I like the Logitech Brio. And then there's a mic up here, which doesn't have a name. Yeah, it doesn't have a name on it somewhere. And then for lighting, I don't use a ring light. I think ring lights give weird reflections. I use an LED garage light with panels, and then I actually bend the panels to the right, what I'm comfortable with for lighting. Phil Nealand, howdy. Google Archipelago. To be fair, see, so we have a Letterkenny fan with us. Nice. RAI Stoners, howdy. And of course, howdy Google. What is your opinion on DSCR loans? I'd have to make one up, because what does DSCR mean? I have done conventional loans and conventional loans. One was a 5% down on a duplex. I've looked into asset-based lending. Rates are worse, because I know that at some point I'm going to have 10 mortgages in my name, and then I'm going to have to look into other lending, seller financing, something like that. But I haven't yet. So like Michael Zuber, I know what I know, and I know what I don't know. So I don't know that I could give you a good opinion on DSCR loans. Sorry. Ben Tipton got 10 units back in August, 3 duplexes and 1 fourplex with separate utility garage. First commercial loan, $170,000 down, $90,000 cash, $80,000 HELOC. Total purchase price, $820,000 with closing. Awesome. Congratulations. How does that loan look? Is it 30-year fixed rate debt? Is it an adjustable rate mortgage? Does it have a loan revaluation period at 5, 7, or 10? That's always my fear with commercial lending. Michael Zuber has found, he has a guest that comes on Fridays, I think, that does 30-year fixed rate commercial lending. I think the rates are always a little bit higher than residential lending, but if the interest rate doesn't matter if the deal makes sense. Remember, we're looking at the return. What is the yield? Phil, I choose a lazy person to do a hard job because a lazy person will find an easy way to do it. Bill Gates. Yep. And something my dad said all the time, and I'm sure he's quoting somebody. But if you want to find the easy way to do something, ask a lazy person. So Adam, howdy, and asked me to talk about DSCR loans. Don't know the acronym. So unless it's something like an acronym that means seller financing or something, then that's something I've looked into, but somebody will explain it to me in the comments. Larry, howdy. Howdy. Do you have standardized inspection clauses in all of your offers? What are these? Have you ever withdrew an offer and lost some earnest money? Can you wear your cowboy hat while explaining this? Dang it. Next week, I'll have it closer. It's all the way in the other room. And a blank screen for even like 15 seconds means that the viewer count would drop by half. I'd like to wear the teaching hat for that. So my offers are made by a real estate agent who works for a brokerage, and in all of their loans, they have standardized inspection clauses and appraisal clauses. So the verbiage is legalese done by that brokerage. First, he worked for Keller Williams, then he went to Mosaic, and now he's with anyone. I have not lost earnest money, but I have backed out of a deal one time when I was actually made the offer, had the inspection, did the appraisal, and there was enough things going on that it was a deal to pull out of. I have a video called When I Was Glad I Lost Money, because I was glad I paid for the inspection and the appraisal to find out that that was not a deal that I wanted. So the inspection clauses are standardized, and if I'm going to pull out, I would do it in that period. And normally I like a 10-day inspection period to have plenty of time to make up my mind. The more the pendulum swings to the seller side of the seller's market, the shorter you might make that period, but I would not go below 5 days. I want enough time, and contact your actual home inspectors to make sure they have availability to make it out. And just know, like you know what the area average rents are. That changes how available your home inspectors are can change too. So stay on top of that. Dale, howdy. Hi, Dion. Should I buy my first primary home first or buy and hold rental property? I'm pre-qualified for a conventional loan, out of state 2 to 4 duplex, and pre-qualified for FHA loan. Thank you. I would start with the house hack if possible, especially if the house hack had a house with an ADU or a duplex or up to 4 units where you can get rental income on your tax returns. One of the things that worked for my strategy, because I had a bad debt to income ratio and wasn't making a lot of money, was I moved from my house into an apartment for 2 years to get the rental income from the house on my tax returns, so that the next time I went to buy a property, the rental income on the property I was purchasing could count in my debt to income ratio, making debt to income mean almost nothing as long as you're buying the right deals. So they do want to see rental income on at least 2 years tax returns to do this. So the sooner you can get that to happen, to me, the better for your investing strategy. But they also might want to require or like to see the majority of your units have more than 3 months remaining on your leases. So I prefer, and I just did the binder strategy. Today's Tuesday, so yesterday. And part of the goal was, we need to get the rents where it makes sense for both of us. And the other part is I want a long lease. So we signed a 1-year lease because they were on month to month. So month to month leases don't help you because some lenders won't count that rental income in your debt to income ratio. So the mortgage exists and that rent doesn't to them. So that is one of the problems with Airbnb, VRBO, if your debt to income ratio is bad. Until you have that income consistently on your tax returns too, then some lenders will look at that. So each lender is built different, and make sure you ask them what their criteria is. So to be clear, Dale, what I was looking at was if you can house hack, focus on that. If you can't, and your FHA was just to buy an owner occupied house and you weren't going to buy other units and you weren't going to have roommates, then I would probably go to the invest in on the rental property to get that rental income on your tax returns. Because technically that's pretty much what I lived in a house and I moved to the apartment, which meant I was basically buying a house, but renting to get the rental income on my tax returns. So I would be doing the same thing. I didn't have the down payment to then immediately go and purchase a house hack. Sean, howdy. Hello, Dion. I'd like to know more of your nuance of seller's financing. In particular, could it be used to get a lower down payment than 20% than traditional lending? Yes. So some of the benefits to seller financing is it doesn't take up, the best to me is it doesn't take up one of your 10 loans in the 10 that you can have on your own for Fannie Mae, Freddie backed loans. But the other is sometimes the seller doesn't want money. Like that could be the biggest negative to them. Matt, the lumberjack landlord, got a deal where someone else offered significantly more, but the person needed a place to live for 3 months. So Matt built in you can occupy the property for up to 3 months or whatever, probably did a holdback or something, whatever his thing was. I just remember that finding out what mattered to the seller was what made the deal go through. Sometimes sellers have a high income and any amount of money that they get in a lump sum from a sale of a property is going to be taxed at a high rate. If they might want a small down payment because they're looking for consistent monthly income from that sale. So yes, seller financing can be used to get a low or no down payment. Generally, your down payment's going to have to be enough to cover anything that they have left on a mortgage, or you have to get a mortgage to cover that, plus your whatever your down payment's going to be. And your down payment's probably going to have to include any agent fees. If they're selling with an agent, there's going to be a 6% usually fee. So if you have an agent, they split it and each get 3. Sometimes they'll do 2.5 or whatever. Never try to negotiate down your agent fees. That's a good way to ruin your reputation in real estate investing. But if you don't have an agent, an agent over there is probably going to want the full 6%. So your down payment's probably going to have to be at least 6% of the value to take care of agent fees so that the seller doesn't have to write a check to sell an asset. And yes, if you email me, Sean, I will send you my actual seller financing letter. It points out the benefits to the seller: avoid a large capital gains, get consistent payment, not have to deal with tenant problems. I'm paying you interest instead of the bank. Like, it lists out things that the seller's going to want to hear. And then it points out everybody wants to know, what's the catch? What's the hook? So I point out what the benefit to me is too. And we are, and I'm going to find where I'm at here. We're at Phil next. So, bartender wisdom. We hit 50 likes, and I want to thank you for that. I appreciate that. To hit that during a live stream means we literally have 53 viewers right now and 53 likes. What are the odds? Like, usually it's like a 20% ratio. When you have 1,000 views on a video, you're lucky if you have 200. Like, you're lucky if you have 100 likes at 1,000. So, thank you for that. Most people, especially if this is bartender wisdom from Dion Talk. I should probably make a short of this, but most people watching my content think I would like a larger portfolio. I either want more units, more appreciation, more cash flow, more principal pay down, more income that I don't have to work for. I don't have to sell my life 1 hour at a time to get this income. So the position that you're in right now, our goal is to grow it. That's why you're taking in this content. I'm still growing mine. I'm still watching. I still watch, one rental at a time, lumberjack landlord, minority mindset, old Stephan stuff, BiggerPockets, real estate rookie, all, the different things that I still take content in, right? I'm still learning. There are still things that I haven't done in real estate quite a bit. One of the things I really like about the three amigos is getting on there with Matt and Mike is their portfolios are 10 times the size of mine or more. I'm still learning by interacting. So think about where you want your portfolio right now. Think, okay, I want $10,000 a month in cash flow, or I want 20 units instead of 16, or whatever your goal is in real estate. Think of where you want to be, where you want your portfolio size to be, or what you want your cash flow to be. Now, think of yourself there. You're in that position. You have that cash flow. You're probably going to feel exactly how you feel now. You've done it. It's great. You've got the cash flow that you wanted when that was your goal. But now, what's the next step? Is it now you've got the cash flow to make work optional? Do I grow my portfolio without really worrying about cash flow adding so that I can gain more appreciation so that my kids will inherit more? Is it now I want to Matt the lumberjack landlord? I want to add the Lambo property. What is the next step, right? So when you get to where you want to, so right now, if you were where you want to be, when you're there, you're also going to want to be somewhere else. So the goal for real estate investing would be to love the moment you're in now, this journey that you're doing now, this first rental, the third rental, the first time you use the binder strategy and a tenant asks you for a $310 rent increase and then thanks you and says, thank you. Because what tenant's ever been involved in the decision-making process to set their rent, right? So you keep them below the area average rents. The tenant's getting a good deal and they got to be in the conversation and they thank you for raising their rent. Enjoy that. Whatever you're doing now in real estate, if it's phase one in the order of operations, are you just now learning to save? And sometimes I'll ask people, how much can you save? And they say, well, I don't make enough money. I'm going to save later. Sometimes it's your family. And they say, when I make more money, or I'm going to quit my job to get a better job so I can make more money and then I'll save. I said, so you can't save anything now? And they say, no, not really. And I said, so you can't take $1, just $1, and put it in a drawer and not touch it. Just leave it there. Well, most people can do that with $1, right? Well, now you have a number. And now that it's measured, you can improve it. Can you do 5? In a month, can you do 10? That's not even $1 a day, right? So enjoy that. The first time you think, okay, I want to save, I want to put $500 into an account for investing in my future that I don't touch. It's not a part of my emergency fund. It's not something I'm going to spend. It's something I'm going to invest. When that happens, have that same emotional feeling of, I hit the cash flow I was looking for. I hit the number of units that I was looking for. That's bartender advice. Wherever you are, we want to grow to the next phase. When you grow to the next phase, all you're going to want to do is grow to the next phase. Along that journey, figure out how to enjoy today. And the chat moved again, I think. Sorry, Phil. How do you manage your time? Full-time job, YouTube, a little real estate, gaming, and kids. So behind the scenes info on YouTube. Making a 10-minute video when I first started took me about 10 hours. more than that, really, because I would have to research the subject. Like, I wanted to know. The first time I made a couple of comments in the BiggerPockets forums on, hey, this is, you should do conventional instead of FHA. Like 10 things were pointed out that I didn't know about conventional and FHA loans because I hadn't used an FHA loan. So I was like, oh, I better research this before I come up with characters to play those types of loans. So it would take a lot of time. Well, now making a 10-minute video probably takes me 3 or 4 hours. Coming to the concept is what takes the most time. The live streams, I want to thank everybody who's here coming to the live stream, because even if it goes 3 hours, this is a video on YouTube that I get to do that's only going to take me 3 hours. Like, that's great. It's a great time saver for me. And I'm hoping the information presented in question and answer format actually helps, because a lot of these questions that people are asking are things that I wouldn't think to bring up, and someone else might think, I don't even know how to find that information. But now there's a question, it sparks the conversation. The Three Amigos really helps because the three of us get together. That video, since it's the three of us putting information together, doesn't take much time. So I've gotten YouTube down to like less than 30 hours a week to do 3 videos a week. So I'm winning there. My job is the biggest time thing. It's 50 to 60 hours a week, but I love what we do. Like, I get to play in trucks like it's a go-kart. We have simulators. People come in, and the simulators have some amazing features where there's crash mechanics, or it's like Sims that you can have people walking by that then start a fight so that the student gets confused and hits the ambulance because they're watching the people fight. Like, I get to play at work. So to me, it's not so much how do I manage my time, it's how do I make sure that my time is enjoyable. Like saying something like, I commit to every Tuesday at 4 p.m., except for one day of the month when it's going to be short, to at least 3 or 4 hours of doing a video to answer questions. You would think that's a big time commitment, but to me, this is fun. I get to hang out and answer questions that some of these, like DSCR, I got some Googling to do. So that's kind of how I manage my time. The kids is a rough one. As a single parent, raised 3 kids. There's a 10-year gap between oldest and youngest. So literally that was 28 years of being a parent. And they're over 18 now. And I've said it a few times, but you would think that would mean that they take less time and attention. No, it's just different problems now. Yeah. Time management is rough. So I own 10% of the trucking school. They gave me 10% ownership. The owners that own 90%. One time I was talking to the owner, the male owner. There's a husband and wife team. And I said, look, the job's great. It's 50 to 60 hours a week. I'm having a little trouble finding the time and the energy to like continue to work out. It's very important to me to stay in a decent shape, right? I mean, I don't have the 8-pack. I'm not working on the keg yet either. But he said, schedule it. I mean, you have a job, right? And somebody says on Tuesdays at this time, you're going to go on the Air Force Base and you're going to give a 2-hour brief to the Air Force personnel. That's a schedule. You don't miss that, right? So why not schedule your workouts? To manage your time, whether the task is something that's going to make a several $100,000 impact to your business or make you happy, like a new VR game comes out called Zenith, and I spend the entire weekend playing VR and hoping that the lines from the VR helmet are gone by the time I have to do a live stream on Tuesday. Not that that's a real thing. Schedule it. Just put it on your schedule. Like, this is the time I'm going to block out for this. That's how it works for me. So I have some memory issues. So I have Post-its, phone reminders, things on my calendar. Change your settings to private so your coworkers don't see that you have to schedule when it's time to go do things. Like, not going to overshare. Where was I at in the comments? There we go. Ben, big props. Keep up the content. Thank you. Phil, great question, Dale. Good. Scott, howdy. Order of operations, great topic. I will come back to this. Nice. Yeah. So the first, it looked like 32 minutes or so is going to be the video that covers real estate order of operations. Jamil Diaz, howdy. What is your take on paying down a mortgage versus leveraging? And if leveraging up, how much LTV? So I like the LTV of 70% or less. I want to be as close to 70% as possible, so I'm gaining as much appreciation as I can. Dave Ramsey talks about focusing on paying off a mortgage or doing a 15-year mortgage so it's a shorter time period because he's focused on being debt-free. I'm not. I wish I had billions in debt. More than that, if possible. I wish I had the debt of the government, as long as the return I was getting based on that debt scaled. The amount of debt doesn't matter. It's what is that debt doing? Is it producing more than it cost? Preferably is somebody else paying it off. So I focused and paid off one mortgage before I came to the realization. There were a couple of caveats though. At the very beginning of this video, I talked about learning how to save, and part of saving is figuring out when to pay off debt or when to invest. If an interest rate is at 6% or higher, I would focus and pay it off. So if I had a mortgage that was at 6% or higher, and I had one that was at 6%, I would focus and pay it off. So I did that. I had different reasons. I was trying to stay at 4 mortgages because in 2013 to 2015, lenders were limiting large lenders were limiting people to 4 mortgages in their name. They've upped that to 10 now. So once I get to 10, I have a decision to make. Do I pay off a mortgage and add another one, or do I go to asset-based, non-QM, commercial, seller financing, or some other format that doesn't take those 10 mortgages that I can have in my name? Or if I absolutely lose my mind, I can get married, have a spouse, and put 10 mortgages in their name. Not today. Totally sidetracked myself there. So I wouldn't pay off the mortgage unless it was 6% or higher. I want more leverage. I don't want to be over leveraged. And for me, over leverage would be a loan to value across the portfolio as a total of above 70%. When things like 2008 happened and a crash in real estate, which was 20%, can happen, I still want to be able to, if I ever had to walk away from the assets, I don't want to have to write a check to lose the assets. And that's not actually how it works. In real estate, I would not mind if my property values dropped to zero. That doesn't matter. Rents are what I'm worried about. So I do buy in places where I have multiple economic drivers, more likelihood of having tenants from different sources, and high demand for rent, so that the likelihood of rents going down, which hasn't happened in my area for 84 years. So I have fair confidence that it's not going to happen. That's what I'm more concerned with. Sky Roast, you lose weight? No. No, I don't need to lose weight. I need to move weight. I need to gain about 10 pounds, but make sure it goes in the right places. Thank you for that. Con, howdy. So, what do you recommend? I can't find multifamily in my area, single family or over 350, 20% down, and my yield is less than 10%. So find your area average yield. If it's less than 10%, if it's 5, I would look for 7s or 8s. If in mine it's 7 or 8, so I look for 10s. It's 6 or 8 now, so I'm looking for 10-ish. I would add the asset class that a lot of investors miss and a lot of home buyers don't want. In your area, add this language to your searches. ADU, DADU, granny flat, mother-in-law house. This stands for auxiliary dwelling unit or detached auxiliary dwelling unit. So basically, it's 2 houses on one property. And some places have restrictions. I have a friend here in Washington who bought a house with an ADU. They're both 4 bedrooms. So they're both over 2,000 square feet. These are really nice 2 houses on one property. One's an ADU. Some areas limit what the ADU can be to a certain size. So know your local laws. But most investors look for small multifamily. So they're going to see the duplex, triplex, fourplex, and they'll put in duplex, triplex, fourplex, right? But they forget to put in ADU, DADU, granny flat, or mother-in-law home, because you have to learn the colloquialism that's used in your area. What do your listing agents call that asset class? And that's what it's going to be on the MLS as. Words are hard. Apparently letters are hard too. Home buyers don't want a house with an ADU because they don't want tenants and they don't want to buy 2 houses. So I would add that to your search. I would have multiple agents searching for small multifamily, because small multifamily do not show up on Zillow, Redfin, or any of those other non-MLS places. Think about this. Most people right now selling duplexes and triplexes purchased it 30 to 40 years ago, 80s, early 90s, have held it, have paid off the mortgage, and are now in their 70s thinking, I'm going to step out of real estate and completely retire out of real estate. They don't think Redfin, Zillow, All they know is MLS. So they're going to put them on the MLS. You have minutes to get an offer submitted. I try for 40 minutes. That's my goal, 40 minutes or less. I've done offers in up to 2 or 3 hours, but they're usually off the MLS already. By the time a small multifamily gets onto Redfin or Zillow, every deal that I've purchased made it on Redfin or Zillow 2 or 3 months, not minutes, months after I closed. That's when they finally showed up as, hey, this is a place that might be available, but it's pending. So multiple agents with searches set up from the MLS, and you check it a couple times a day to see if when it comes out, you get your offer in. You're not going to find small multifamily usually on Redfin and Zillow or platforms like Redfin and Zillow. Tony Carr, congrats on 8K. Thank you. 8K. My goal when I made the channel was to get 300 or 400 people so that I can share the videos to answer questions in the BiggerPockets Facebook groups. So hitting 8,000 is pretty cool. And the only really goal I have tied to subscriber count is 10,000. I'm going to make the LLC rant because, like I said a couple of times, that's when I'm going to make a lot of people mad and I'm going to lose some subscribers. And I want there to be some people left. Cesario, howdy. Phil, Larry Chong, the cowboy hat is so unexpected despite the howdy. Yeah, I have a couple of cowboy hats. And when I met REI Stoners the other day, I show up in the hat and I could see his face go, is that him? I think that's him. So, let me see. So sorry, I withdrew a message and it's going to make me lose sleep. Tom May, who does makeup and wardrobe? Exactly, who does my wardrobe? Well, if you've seen any of my videos, you all pretty much know I don't wear pants while I'm doing this. Do wear the shirt. The shirt is trying to be the same in each one. It's from my nonprofit, TPS, Transportation Placement Services, and where we do job placement in non-driving positions with trucking companies. And yes, I did the stapler and the logo just so I could have TPS reports. And Michael Zuber is about to hit his goal of hitting 500 cards sent out for deals done in within a year's period. And he's going to cut a check to his food bank. I'm going to cut a check to the food bank in recognition of him hitting the 500. He's also going to dye his hair blue. I'm going to do the same thing. So we'll be twinsies for one day. Julie, how do you feel about selling a duplex to roll over to a fourplex? Anytime it comes to selling, cash out refinance, or taking out a home equity line of credit, the first question is, do I have a place to deploy the funds? So if you know of a fourplex, it's possible, if you have the funds to do it in any way, to actually buy it and then do a reverse 1031 where you sell the duplex, take the money and not pay capital gains on it because you put it in the fourplex. If you can find the property and then sell it and with confidence think you're going to get your offer accepted on the fourplex, it's not bad. Being the lazy investor, I have not recycled capital. I have not sold property to buy a bigger one. I have a paid off single family house I could sell for about $400,000 and I could buy 2 or 3 duplexes. I haven't done it because knowing that I have a place to deploy the funds isn't a certainty. The $2,200 a month from a Section 8 tenant on a paid off property is a certainty. So yes, I'd probably make more money if I did all the work of selling and finding a place to put it. So the question would be, do you know of a fourplex? Are you confident in your ability to get a fourplex that will cash flow to justify the expense of selling, because you have agent fees and anything else that's going to come up, especially if there's any concessions on things you need to fix, to put the money to work? Matt, the lumberjack landlord, and Michael Zuber would probably be all over that and have probably done it dozens of times. But my goal was not more units. My goal was cash flow to make work optional, which happened in 2018. So I'm not as aggressive as they are. And kind of my persona is being the lazy investor. Like Larry asked, how do I manage my time? Full-time job, nonprofit, kids, YouTube, self-managing 16 units. I'm more rewarded from increasing cash flow than I am from increasing units. So that doesn't mean I'm not adding units. I'm adding units, but that doesn't mean I'm selling units to acquire more units. Shamil, yes, DSCR, debt service coverage ratio, is an asset-based loan where gross cash flow, principal, interest, tax, and insurance. Heard this is a better alternative than hard money. Okay, I haven't used hard money or DSCR loans. Debt service coverage ratio. So that would be probably an asset-based loan. I have a friend, Alex, who works for, I think it's Certain Lending. They do asset-based lending. I should get him on here and do a video where he can explain his loan products. Actually get the information from that guy. And he watches my channel. So Alex, expect a call. Candace, howdy. Hello, I plan on purchasing my first property this fall. I can get a home equity line of credit for $200,000, and I have $200,000 in a Roth IRA. July, my home will be paid off, and I can save more. Should I use the Roth or the home equity line of credit? Okay, so this is not financial advice. This is me giving you some opinions on how I feel about things like a retirement account and a home equity line of credit. I can't stand the idea of a penny being locked away in a retirement account. So I pulled all mine out and I put it to work in a rental. So personal opinion, that's the route I would go. I have a paid off rental, a single family house. I could have taken a home equity line, or what I call a RELOC, rental equity line of credit on that. I didn't touch the equity. I used the retirement account to put it to work in the rental. I would not do either one of those on your first deal. Like if you, and this is just my opinion, if you can save the money for any type of down payment, you have a really good chance if you have that mindset of success in rentals. If you can't save any money and your only way to tap into money is to go pull it out of a retirement account or take out a line of credit, I don't know that you're going to save the money that it takes for CapEx, maintenance, repairs, vacancy, those kind of things. So first development is learning how to save. Order of operations for real estate. Step one, learn how to save. Figuring out how to live on less than what you make. So if you have a rental, or if you have cash flow, or if you have a good savings, it's over there. Brandon Turner has a book on investing in real estate with low or no money down. I probably butchered the title. It's long, but that's what it means. Doesn't mean you don't have money. It means how do you invest without using your money? You are going to need money for reserves. You're going to need money for when problems pop up that we can't anticipate. So in that situation, I would use the money from the retirement account before I would take out a home equity line of credit. A couple things with a home equity line of credit. It can be canceled. The lender can see the wind blow the wrong way in the trees and get fear and just say, nope, we're closing those. So if you have a $200,000 line of credit and you take out $50,000, you have $150,000 left that you can use, and you're at 25% low credit utilization on that loan. If the lender says, oh, we're going to cancel that because we're afraid, so this drops down, that $50,000 that you take out, that doesn't have to be repaid immediately. They didn't call the loan. They just canceled the extra credit, right? But now that $50,000 loan is 100% credit utilization. So while home equity line of credits have some benefits, the biggest problem with it is an adjustable rate. So, in 5, 7, or 10 years, rates can do whatever they want based on what your home equity line of credit is. That's the negative. The benefit is as you pay the amount down, the money that was left up to what you could borrow is available again like a credit card. So there are some benefits to that. But I have not done a home equity line of credit. I know it's a good strategy. It's how my brother got into real estate and retired with 10 paid off rentals. He took a home equity line of credit on his own house that was paid off, purchased a rental, focused and paid it off, rinsed and repeated till he had 10. So it's a good strategy. But I just personally, I have a problem with retirement accounts. I think it's one of the biggest ripoffs that has happened in our country. The people who get rich on retirement accounts are the people who manage the retirement accounts. The most successful retirement accounts, the ones that performed the best, belong to dead people. The next most successful retirement accounts that performed the best belong to people who forgot they had them. And then the third most successful retirement accounts were ones managed by a cat walking around on a keyboard. Forget what study that was, but that was the information I took out of it. The Roth is a little different because there's you're investing with post-tax money, so you could take out the principal without paying taxes on again, and you could take out the gains at a certain age without paying. So I don't like all the rules that come with retirement accounts. I love the idea of taking money, saving it, putting it to work in a rental. That's still your money. Like you have the money right there for the home equity line of credit. That's using your money and paying back the bank for using your money with interest. It's a hard call to saying which one is best to do. The reason I don't suggest using the retirement account for your first or second deal is because that's when we make most of our mistakes. Most investors that you talk to talk about their first year and they're like, oh, I lost this much money and I almost quit and it just sucked. Or a lot of people invest and they actually lost money and they did quit. My first year sucked. I lost a bunch of money and I tried to quit. I was upside down on the house. I was trying to give it away. Luckily, I owed more than it was worth. And so I kept it long enough to actually figure out, oh, the problem is me. I wasn't educated. I wasn't running it like a business. So now I'm running it and it made work optional. So if you're confident in your ability to put the money to work in a rental, I would go the retirement account route. Martin, howdy. Howdy, with internet rates going up, do you think the housing interest, reading words is hard. With interest rates going up, do you think the housing market will have a correction, or what do you think? I have a video on my channel saying no housing crash, or the 2021, no correction 2021. There is a myth that people think if interest rates go up 1%, prices will come down 10%, because that's how the math keeps the payment the same. And home buyers buy on payment. In the 1970s, Michael Zuber did a 50-year spreadsheet, and it shows with clear data that interest rates doubled, home prices almost tripled, because rates don't set prices. It's supply and demand. And what affects the demand is wages. As wages go up, people are able to buy and pay more. As wages go up, people are able to pay rent. So there's an echelon of 4 people willing to buy a property. From the most expensive is the home buyer, the person who buys based on how much they can afford to pay every month. The next person is the investor. We buy based on what the yield is that we can get from the return. Next is the flipper. The person who can add the most value to the property will pay the third farthest down the tier. And then the fourth is the wholesaler, the person looking for the best deal to find a gap, to find somebody to buy it, to either flip or turn into an investment. So that's the order of operations on who will pay the most for rentals, for properties. Wages set prices, not interest rates. We might see less transactions happen, less people getting into the market, but the demand is there. And to be in a balanced market, we need 3 million properties on the listing. And that gives us 6 months worth of inventory. We're at like 9 days worth of inventory in most markets. There's almost 400 markets in the country. So we don't have one housing market that can do things. You can have an area that had, one mine shut down or one car producer move away or something. And yes, that localized market can tank. But a housing crash or housing correction, I don't see happening. I do see a reason why it's going to crash, and I know the timeline. So if you'd like to know why I think there's going to be a crash and when I think it's going to happen, let me know in the comments or in the questions. But no, right now, 2022, prices are going to go up. Even if rates doubled, prices will go up. So even if rates go up a little right now, we're seeing the Fed said, we're thinking about raising rates. So all these home buyers jump off and we have more demand for less supply. Prices are going up right now. I see we don't have adjustable rates because interest rates didn't cause the housing crash of 2008. They were a factor, but they were only a factor because of some of the things like adjustable rate mortgages, ninja loans. People were borrowing 105% of the value of a property. So being upside down day one, owning the property or purchasing the property, and didn't have to prove their income. So there's all those factors that just don't exist now. So we don't have a reason for a crash. We don't have a reason for a correction. There might be a slowdown. Like I said, less transactions, but prices are going to continue to go up. So as an investor, here's the sentence that I pretty much live by. The longer you wait, the more you will pay. And let's say that hypothetically, if interest rates went up 1% and prices came down 10%, because that's what it takes to make the payment the same, why wait? You're paying exactly, I said the words, the payment to stay the same. You're just paying more money to the lender than to the seller. So it makes no sense, even if rates would cause prices to come down, to wait to purchase. The purpose of my content is to help you reach financial freedom in 10 years or less. And waiting longer to pay more doesn't make sense. So you asked what I think. That's my opinion. Carrie, howdy. Ever prefer to do a 6-month lease with a new tenant versus a 12-month lease? I prefer to do a 2-year lease. Know your area. In Washington State, to do more than a 1-year lease, the tenant's signature must be notarized. Yours doesn't as the owner, but the tenant has to have a notarized signature if the lease is over a year. Didn't know that for the first couple of years. Never got in trouble. It would have to have like literally gone to court and the tenants to say, well, I didn't sign it. But so as an extra step for the tenants, the landlord, I would pay for that if I wanted the 2-year lease. Now, so most of my leases now are 1 year long. I'm the lazy investor. I don't want to have a tenant turnover. I don't want to do a tenant flip. The longer I can create the duration that a tenant stays, like I literally have criteria in my auto searches set up and my own filtering system to help limit tenant turnover. Limiting tenant turnover happens before you buy the property. Examples are, I want washer dryer hookups inside the units because somebody living in a place where they have to go and do laundry or use a shared laundry is waiting for another place to open. I want 2 or more bedrooms with a garage because more space equals more stuff equals less likely to move. I allow pets because people don't like to relocate an animal. And even if the human moves with the pet, that's a relocation. So like I'm strategizing to limit tenant turnover. Longer leases helps me do that. There are times it makes sense. I told somebody today their next tenant that they're putting in this one place should probably be on a 6-month lease. He's retiring in 30 weeks, 29 weeks or whatever. So this year. When he retires, that property is a 5-bedroom house and he wants to by the room traveling nurses. Great plan. But he doesn't want to do it while he's working because of the added workload of coordinating, scheduling, all the different things that go into that. So I told him, if you do a 6-month lease, you'll have that tenant there for 6 months. When they move out, now you're retired and he's retiring early. He's not in his 60s or 70s. He's gotten into real estate. He's one of my employees. We're losing an employee because I helped him get on the property ladder, which is awesome. He's going to, right after he retires, then switch to the traveling nurses. So in his case, in this one instance, it makes sense to have a 6-month lease instead of a year-long lease. But I just did the binder strategy yesterday, and my goal was to get at least a year-long lease, and we did. So there are times it makes sense to do 6 months. I prefer longer. Ben, 820,000 total purchase, 90,000. 80,000 HELOC, 20-year loan, 3.4% with 10. Yeah, the reevaluation period is what scares me. Rental income is $7,900 with room to raise rents to $950 per duplex and $750 per unit in fourplex, coming to $8,700 a month. The thing that keeps me out of commercial for now, when we're first starting out, if you just bought that set of properties and it was the only thing in your portfolio and you didn't add more units and you didn't have other cash flow, at the 10-year mark, if you don't have the net operating income that lender likes, and they say you either need to refinance with somebody else or you need to sell the property. What if property prices went down? Because that's possible, right? What if interest rates are double or more what they are now? You're not going to be able to exit that without a bankruptcy or something really bad. That's my fear. And I don't mean you and I don't feel comfortable doing that. But if you have several other rental properties and you have the cash flow and you have confidence in your ability to find screen place tenants, and that area has multiple drivers for tenants, I'm not saying it's a bad strategy. People invest successfully in commercial properties. It's just what keeps me out of it. Michael Zuber went from single family to large multifamily back to single family. So he pivoted with what made sense with the market. So congratulations. And I hope that works the best. I hope my content helps with screening tenants and the binder strategy and stuff like that. It's just a strategy that I haven't used yet. And where do we go? Angel R. Does having a small portfolio make it harder to date now that you have much more to lose? Let me process this because I always make dating jokes. I want to make sure that does having a small portfolio make it harder to date now that you have so much more to lose? Dating is a nightmare, whether you have stuff or not. I think it was a little easier in the 80s and 90s because you just dated the person. Now you're dating the person and all of the opportunities they have with social media and how many followers they have and how many dating apps they're a member of. But I think getting married would be harder because of having assets, because you're commingling finances, and to date somebody and even for a second think, are their assets the same as mine so that we're not putting more at risk than the other, takes the romance out of the whole thing. Yeah, no, dating is hard because I'm me, not because of real estate. But that's a good way to look at it. What do you have to lose? Prenups mean nothing. So, like I said, the marriage would be a little bit more difficult than dating. Ben. I don't know if I can say the name of that town. Gloucester? Cool. REI stoners. Howdy. Take the 401k match or not. I understand the bank looks at half of as reserves, but I don't want to put it. I get 100% to save faster for our first property. I do the match. I don't like it. I actually don't like trapping money away in a retirement account. But logically, we don't invest on emotions. It logically makes sense to think double, so up to the match. I still do that into my retirement account. It irritates me when I look and I see the amount is going up. I'm thinking that money could be working somewhere else, but it wouldn't be that high because of the match. So I still do the match. Phil, thanks for the productivity lesson for a fellow lazy. Consider making a separate video of that. Productivity, yeah, that's a great idea. Cool. Christopher, howdy. I'm a British guy whose life goal is to move to the USA. I'm an engineer, an ex-Navy, and believe investing in US real estate will help me reach this goal. What advice might you have for someone like me? So investing from another country, I would invest checking out the YouTube channel. A Canadian investing in the United States. So he's an investor who obviously lives in Canada and invests in the United States. So he's probably got great advice on how foreign investors can invest here. The one piece of advice that I have from personal experience is I would suggest a strategy of buy and hold without the intent to sell. Because as a foreign investor in the United States, when you go to sell, there is an added tax for not being a US citizen. And the only reason I know this is I purchased a duplex and title screwed up the listing with the IRS on who was who. And all of a sudden I got a bill for $44,000 that was supposed to go to the seller. And took 7 months of emails back and forth with an IRS rep and the title company. So if you go to sell, look into the laws on what that extra tax is by being a foreign investor here. So buy and hold strategy doesn't matter to me. If you were doing the Kris Krohn method where you want to buy, keep it for 7 years, and then sell, that's where that tax could be triggered and it could really impact your profit from that sale. But a Canadian investing in the United States, YouTube channel. Hip Harp One Silver. Howdy. Do you believe that there is a time to sow and a time to reap what you sow? I have dry powder to build further, but the right one will have to come along. Same thing. I've been saving. And so the way it works for me is we call it dry powder, but you're saving up something to take action when the right deal comes along. The right deal might come along in the peak of the market, before the peak, or during the correction, if whatever set of the market you're in, right? As the savings account grows, the investing account grows, as that dry powder grows, what I'm searching for grows as well. So I'm looking at, I've got this money in a savings account that is intended for investing. It's above the reserves. As that grows, I'm increasing my search. I'm also thinking, my goal right now is to buy a fourplex that costs over $1 million. But I made an offer last week on a duplex because it was the right deal. I'm now in second position for that duplex. Somebody else outbid me, but I'm in second position in case their deal falls through. So I would buy 2 duplexes because they would be the right deal, or buy the duplex and then continue to save. So there's a time to save and then there's a time to invest, but it's always a good day to buy a great deal. So as your savings grows, the bandwidth of what that great deal might fall in can grow too. Larry, being in the Pacific Northwest, when hunting down older built rentals, what do you look out for in terms of HVAC? Why do you like certain things and dislike certain things? I dislike HVAC. I have 2 rentals with HVAC systems. And today I paid $557 to have an HVAC motor replaced. Most of my units in the Pacific Northwest have baseboard heat. And I know people go, I don't like baseboard heat. It's my favorite. I've never had a problem with baseboard. I've never had to replace one. I've bought a place that had one that was like smashed, and I spent $40 to put a whole new baseboard heater in. But HVAC systems, the ducting, the mechanisms inside there that you just rot eventually, filters. I don't like HVAC. In the Pacific Northwest, we don't have swamp coolers. Most of the people I know, I think I know two people in the whole state who have air conditioning units. Some people will put in window units, but HVAC systems are the things I don't like in the Pacific Northwest. What else do I look for? I prefer to buy places with garages too. And my thought was originally, it rains a lot here. Parking in the garage is just better, right? 16 rental units. Almost all my places have garages. One tenant, one out of all of them, parks in his garage. And he's in the Air Force. And sometimes he leaves his truck in there for 2-3 weeks or months or however long he's gone on whatever he's doing, right? So my thought for reasons for having a garage, they end up just being storage. Trying to think of what else I avoid. I don't really have anything else in my auto searches that are cut out. HOAs. I will never buy in an HOA. I actually heard somebody say, I want to buy in an HOA because then your neighbors keep up with their yard, so your property values go up. And that is absolutely fictitious. Investors, as a general rule, don't like HOAs. So less demand on an asset means they appreciate less. My duplexes that are not in an HOA have doubled in value, and my house that is in an HOA has gone up 20%. So yuck. So that's what I avoid, HOAs. Michael Smith, howdy, you made it. Jay Markey, howdy. Can you explain how you would deal with real-life tenant versus tenant noise complaint? Thanks. Absolutely. Tenant complaints on noise are police complaints. Know your municipality, whether you're in the county or the city, so you know which department to call. Don't call the emergency number, call the non-emergency number. And have the tenants give them that number and say, anytime there's a noise complaint, you call it in. Most municipalities, people think, oh, the cops make so much money off of speeding tickets. Well, our city, when we gave a speeding ticket, if it was in a school zone, whatever the ticket was, and my one ticket that I ever wrote, because I always like to, we had a choice as oversharing. As a police officer in the city I was at, you could either lecture or write a ticket. You can't do both. And I'd rather lecture. So the whole time I was a cop, 8 years, one ticket. And it was because it was in a school zone. 57 in school. His ticket was like $1,200. And I walk up to the window to lecture him. And he says, man, I'm really in a hurry. Can you just write the ticket? I'm like, yep, no problem. The city got $25. That's what the city makes. The municipality got $25 on a $1,200 ticket. Speeding tickets in a city, the city gets $2. So they don't write tickets to make money. That's a myth too. But noise complaints, that's a complaint that goes to the city. And those fines can be $400, $600, $800. Your tenant gets hit that from the court system in your city, the noise complaints stop. And a lot of people say, well, the cops come and nothing happens. Let them know this is a reoccurring problem. And the second or third time they're out there, that cop will write that ticket. Noise complaints are not a landlord issue. It is a landlord issue if the tenants don't have any recourse and they go, yep, I'm just going to leave because those guys are loud, right? So turnover is expensive. So to help limit that, you find out the non-emergency number for the local law enforcement, whether it's and the way it works in Washington is if you're outside of city limits, it generally falls into county purview. If you're outside of where the county covers, it's a state patrol issue. But inside municipality, it's a city. So you got to find out the right number to give them to make it easy and say, this is who you call for a noise complaint. If the tenants are Section 8, you can also call the housing authority and say, hey, we're having these issues because the tenants don't want to lose that benefit. In Washington, to get on the housing voucher program is about a 5-year wait. So it's a benefit they don't want to lose. So I've never had a problem with any Section 8 tenants. If the tenant is in the military, when you have them fill out their application, you get their chain of command. They're basically their boss. You wouldn't want to call somebody's employer to make a complaint, but you can call military supervisors and make a complaint. because military installations want to maintain good relationships with their local communities. And so I've never had to do that, but I was in the Marines, and I know that if somebody called when I was renting, I lived off base because I was a single parent. If that landlord called the base, I would have been a perfect tenant. Like I would never had a complaint from the landlord, but that's an option that you have too. So it depends on the type of tenant that you have. Brett, howdy. Julie, don't feel compelled to answer, but do you have any inside scoop on a U.S. truckers to D.C. convoy? It's primarily being done by over-the-road companies and small owner-operator companies. That is all I know about it, and I know it's not getting the media attention that an event like that should, but I don't know that it's going to be effective. So I'm not involved in it. I run a truck driving school. I train people, but the people that I do know that are participating either work for huge companies or their own small owner operator where they have 2 or 3 trucks. I don't see many of the smaller trucking companies sending trucks to that kind of stuff. Phil, I still contend that your rant video will boost subscribers. Can't wait. I hope so. Like I said, I'm stunned that we hit 8,000. So thank everybody that hit subscribe. I appreciate it. Michael, question. Have you heard of anyone doing a real estate deal for gold or other assets, but not cash? How was that sale completed? No, the only thing that comes close is I've heard of some transactions happening in Bitcoin, but they're hyped up by the media, so I don't know if they did it for the attention. So no, not other assets. Believe anything can be done. I would use an attorney to make sure the transaction was done the right way. If it was me, I don't think I would use an agent and a title company to bring in a suitcase of gold to buy a property with. I would probably go through a real estate attorney because it would be kind of unique. REI stoners, any other countries you would invest in? No. Too lazy to learn the international rules. I do know that if you want to invest in Thailand, basically the only path I know of is marrying somebody who lives in Thailand, but then they own the asset. So if there's ever a divorce, they get 100% of it. So no, I haven't looked into investing in other countries. I do consider being in not an expat where you give up your citizenship, but where I spend the majority of my time in another country just because the cost of living is so much less. For instance, Colombia or Thailand. The struggle as an American, as a United States citizen, to find a country that doesn't hate people from the U.S. That's the trick. G. Boland, howdy. Are you going to start a mentorship program? This is it. We're the live streams every Tuesday. I do answer emails. If you have questions, you can send them via email. I have set up some phone calls, but that is a lot really too time consuming to where, as much as I would like to say, hey, email me your questions, I can probably send you a video on some of the questions because I try to make a 10-minute video answering most of the common questions. That'll sometimes tell me the questions that I need to make a video for or come to the live streams. My goal was really not to monetize this content. I was answering questions in the BiggerPockets forums and the official BiggerPockets group and the Real Estate Rookie group on Facebook before we made the three amigos of FI, or the three amigos of FI Facebook group, where me, Matt the Lumberjack Landlord, and Michael Zuber try to answer questions. And I kept getting the same question. What's better, FHA or conventional? Do I invest or pay off debt? Or, the questions were kind of the same. I thought if I had a way to just make a 10-minute video and I could just send this to that person, I could answer this question 50 times with emails. So I made a YouTube channel to make short videos to answer those questions. I didn't want to monetize the channel. The goal is to teach financial freedom. Like in 10 years or less, the average person can make work optional, right? A guru. So in my head, there's 2 versions of the word guru. Guru is the expert you want to learn from, and guru is the rip-off artist. Like there's 2 versions. The tone and inflection is exactly the same. So the only way for me to really differentiate the difference was this person has information I want to learn, and they give it freely. This person, especially when it comes to finances, the rip-off artist, the litmus test is, do they make their money by investing in what they're teaching, or do they make their money by teaching what they're investing? So Michael Zuber's portfolio is this big and his cash flow is this big. So I'm like, I'm watching everything this guy puts out that I can get into my schedule, right? His daily updates, because he gets up like a machine every morning and does all this research. And then in a 10-minute or 15-minute video, he says, here's what matters to an investor, right? So I learned from that. That's a guy I want to learn from. Matt, the lumberjack landlord, drops out in high school from the 9th grade, develops a portfolio of over 100 rental units and is just growing this machine. So I'm like, okay, this is a guy I want to learn from. If somebody's making all of their money from a course that they sell or the revenue from their YouTube channel, I take what they say with a grain of salt. Because my goal wasn't to teach a course. If I wanted to learn how to teach courses, then I'd be watching that content, right? But I wanted to learn how to invest, make work optional. So I wanted to share this and not monetize the channel. But if you've seen, every time you click on my video, there are commercials. I hate commercials. I don't have cable. I pay for Netflix, upgraded Hulu. I have all the streaming services. Like I watch a lot of shows while I work out, right? But I haven't seen a commercial in 10 years. I haven't even seen the Super Bowl commercial because I don't watch the sports ball. I haven't seen the halftime, whatever that is. But I only buy things that I want. I am not tricked into buying something by a really good marketing person who puts together a commercial, right? So I don't like advertisements, and I wish I didn't have them on my channel. But in October 2020, YouTube announced they weren't monetizing. They were adding content, commercial content, to any video, no matter the length, no matter whether the channel was monetized or not. So I monetized my channel so that if you notice, there are different forms of advertising in YouTube. You got the little banner things down here. You got the little clicky things up here. You have the ads that start at the beginning, and then 10 or 15 seconds, you can click to skip it, right? You can click to skip it. But there's also non-skippable content commercials. Since I'm monetized, I'm able to go into each video and uncheck that. So it will do the other types, but it won't do the ones you can't skip. So I have a little bit of control over that. If I did a mentorship program, my time is really tight, right? Like I like to enjoy life. I enjoy my job. I enjoy the nonprofit. I enjoy YouTube. I enjoy it with my kids. I enjoy everything I do, right? And it's not that I wouldn't enjoy mentorship. It's just, it takes time. Like the first hour is literally, I have a video on what is the conversation like when I start a mentorship program. What are the questions I ask? Where do you live? How do you want to invest? What strategy are you on? What do you want to, kind of walk through the order of operations. It takes an hour just to kind of get to feel for what information this person needs. Massive time commitment. So if I did that, I would need to charge. And I fear, strong word, but I fear feeling like a fraud, charging for this that I could just share. Don't know that I ever will. So that's as clear and honest as I can be on that answer. Ben Tipton. Have you seen my stable? Exactly. I'm going to need you to move your desk back a little. Tiffany White. Howdy. I totally agree about retirement accounts. I'm so glad I decided to invest in rental property and said, yes, my one good thing that happened in 2020 is the COVID program, or not COVID, what they call it, CARES program came out, and they said, up to this amount of money, you can take money out of your retirement accounts and not pay a penalty. And I was like, haha, yoink, triplex. 17% return. It's the one I did how much a video paid last week's live stream, how much a video paid me in 1 year. I made $131,000 in gains on that one property. And that was appreciation, principal pay down, cash flow all combined together. Or it could have sat in a retirement account and not paid me a penny. So, good call. Randy Whitaker. Howdy. Do you use the LLC for your rental properties? If so, does your insurance policy allow you to use the LLC? I do not use LLCs for any of my properties. All of my properties are in my own name. I actually have a long list of reasons why I don't use an LLC and a short list of reasons why I ever would. There are times it makes sense to have an LLC. If you have partners, a LLC will protect you from someone else's mistakes. If you need hard money or commercial loans, an LLC makes sense because the lenders are usually going to require it. There is Absolutely no tax benefits in having an LLC. Zero. The IRS actually calls them a disregarded entity. They are a pass-through thing, so you're going to pay the same in taxes whether you have an LLC or not. And there is no asset protection when you have an LLC unless you have partners. Piercing the veil is more and more common. And if you're a sole proprietor, that LLC and every LLC you own is going to be named in any lawsuit that you're in. So I'm going to make a video, but not today, when I hit 10,000 subscribers. And I'm going to call it my LLC rant. And I'm going to go off because there are so many people pushing you need an LLC and what it does, because CPAs and lawyers benefit from setting them up, paying, filing on them every year to renew them, filing taxes on them. And there's this big money machine out there that makes money by getting people to have LLCs. But the rant is going to be rough because it actually irritates. I guarantee there is somebody out there today, right now, today, that was thinking I should get a rental property, but I don't have an LLC. So I'm not going to start today. And that's a mistake. They don't need an LLC. There's no benefit at all unless you have partners, need commercial lending, or hard money. So no, I don't do that. I'm waiting until I have 10,000 subscribers because the video is going to be so rough. I guarantee I'm going to lose. I'm not guarantee. I think I'm going to lose some subscribers, and I want there to be some people left. So still waiting to make that video. It's a great question, and it comes up often. And I have a kind of an answer that spells out everything that I just said that I usually put. Like I keep it in my notes on my phone so I can copy and paste it to whatever platform the question came up in. So it's a really common question, and there's a lot of bad advice. There is no tax benefits and no asset protection. So sometimes people get an LLC for the wrong reason. Your insurance goes up, your interest rate goes up. The type of loan you can get usually is adjustable rate or has a loan reevaluation period. You can't represent yourself in court. Like there's all these negatives that come from having an LLC, and the only benefits are if you have partners, commercial lending, or hard money loans. So, Jimena, hola mija, ¿cómo está? You are not lazy. I am the laziest person that we know. This is how lazy I am, and I've said this once before. My family runs tree services. So my two brothers and my dad, they all had their own tree services, residential tree services. So small logging, but most residential tree services. And I was the youngest of the brothers, which meant I was the manual labor. And tree work sucks. I joined the Marine Corps because it was easier than tree work. That's how lazy I am. I joined the Marines because I'm lazy. So I'm definitely lazy. Jay Markey. Howdy. Dion, how do you get the security deposit in first month's rent when inheriting tenants? What if the amounts are lower than the new rent after the binder strategy? Thanks. Great question. So I should probably make a video on this one. That's a good one for a video. When you buy a property, so next week I'm going to have the order of operations. So next week in the live stream, it's going to be the order of operations on buying a rental property from before, during, after, and what you do after you take ownership and probably have inherited tenants. So this will be in there if my memory works. There's a title company. The title company, or sometimes people will use a real estate attorney, but in all my deals so far, it's been a title company. The title company gets and checks to make sure that there's no extra liens on the deed. So there's only the mortgage that's being taken care of, or the two mortgages or whatever. There's no utility accounts with a lien. There's no contractors with a lien. There's not all the problems you can run into. But they also factor not only the security deposits, but the rent. So if you're closing on the 15th, the first half of the month, the seller owned the property. The second half of the month, you owned the property. In the purchase price, when the seller has the amount of money going to them, it goes to title first. Title takes out money to pay for takes your money out of that to pay for like the filing fee, any other fees that are associated with closing. But they also collect the rents out of the purchase price. They don't go to the seller and say, hey, you got half a month's rent, you need to give it to us so we can give it to the seller. To eliminate that, they take the purchase price, the amount of money that's coming from the lender, and they take the rents out, the prorated amount. So the next 15 days of that month is actually your rent. You will get a check, or they might come and say, hey, when you come to the closing table, you have to write a check for $42,000 because it was $43,500, but $1,500 of that is the prorated rents from the units, right? So they'll lower the amount that you're paying at closing. So the title company handles the transfer of deposits, you'll get a check for deposits, and they can do the prorated rent, either giving you a check or taking it out of what you bring to closing. Those deposits need to be set aside because that's not your money. That is the tenant's money. Most places require that deposits be kept in a separate interest-bearing account, which really mattered when interest rates were 3-4% a long time ago. Nowadays, not so much, but I would still put it in a separate interest-bearing account that you call deposits, depending on your area. I do a landlord introduction letter that says, hey, I'm the new landlord, you're the new owner, and you guys were here, you saw the inspection, you saw the appraiser, so you knew a sale was happening, and here's how to get a hold of me for issues, and going forward, please don't pay rent to the previous owner because I'm now the new owner. Here's how I like to collect rents, and spell it all out. Again, if my memory kicks in right, this will all be in next week's live stream. The binder strategy I generally don't use for 2 months on inherited tenants. I'm trying to think, have rents ever actually been so low I wanted to do it right away? No. I usually wait 2 months because that's my screening period. I did not get to do a background check on those tenants. I did not get to check credit, work history. I don't know them. So I want 2 months to find out, do they pay on time? Do I get noise complaints where I need to give the other tenants the non-emergency number? Do they call me for super trivial things? That's my screening period. It also gives me time to replace the locks with coated locks, and it gives me time to put in motion sensor LED lights in the exterior and ask the tenants if there's anything that they would like repaired. And it could be something small like they want new screens or something, right? Giving the tenants those 2 months to understand that I take care of my properties. So in 2 months, when I have the binder conversation, and if anybody's new to my content, the binder conversation is a strategy that actually gets the tenants to request a rent increase, and usually longer leases. They ask for the rent to go up, and then they thank you, and they're happy. So there's a couple of videos on my channel on how to get tenants to request a rent increase. But I want to wait 2 months to do that so that the tenants know I'm going to take care of the place, giving the conversation the best chance to operate. And I've had 2 months to screen these tenants to figure out if I want to keep them or not. Because in that period, I don't care what their credit score is. I don't care what their work history is. I don't care what I don't care, none of that. When we're screening for a tenant, it is to make sure they're going to pay on time. We're not going to have complaints, and they're not going to call us for trivial things. So that's the best time to do that screening. So that's how that works. Scott. Scott Nunez. Howdy. Rehabbing unit in a fourplex. You put luxury vinyl in bathroom or tile. LVP in every room, pretty much everywhere except for stairs. On stairs, I will go and buy a remnant of carpet, and I have a carpet guy that installs it on stairs. Less chance for a slip fall, a little more traction on carpet. But no tile, no linoleum, no nothing, just LVP, the new stuff, and I get as thick as possible. I don't go to Lowe's or Home Depot because they usually, and I don't understand how these numbers work. They either have 12 or 20 something for LVP. I go to a local floor unit and I get the 30 LVP and the larger, like huge square tiles instead of, I don't like the plank version because the bigger square ones, they install super easy and they look really nice, really flat. And the thicker they are, whatever the numbers mean, better noise reduction, because I don't like tenants above or below another, right? But I do have townhome style where the tenant has rooms above or below another. So thicker LVP, and the new stuff is really water resistant. I haven't had any issues. So that is what you kitchen, bathroom, doesn't matter. Ben Tipton, all your content helps. Thank you. Thank you. I appreciate it. Rob, ta-da, I'm here. Thank you for making it. I appreciate it. Christopher, howdy. Thank you for the great advice. It's much appreciated. Buy and hold is the strategy I intend to follow. Awesome. It's the one that works for me. Jay Markey, Dion, do you request copies of leases prior to inheriting tenants? If so, when is the appropriate time to ask for them? Thanks. When you're under contract, you have the right to request copies of leases and a thing called an estoppel. Not sure the root word, what it means, but it means proof that rents have been made, what the rents are, what the leases are. So as soon as you're under contract, you have an offer accepted. I just have my agent ask for copies of current leases and the estoppel, which in one case where it was a little weird that I just got you'll get the right feeling. Like, okay, this doesn't seem right. I asked for proof of rental deposits. So how is the tenant paying their rent, especially during the eviction moratorium? And they just sent me like a little screenshot of their bank statement saying, the person's name and how much was deposited. And in another instance, there was a tenant that was, the lease said they were paying like $900 and the owner said they're paying $1,250. And I said, well, show me some proof of that because the lease doesn't say that. And they sent me the bank thing saying, yep, here's the last 3 payments at $1,250. And I was like, okay, that I could use if there was ever a problem. So it happens once you're under contract, and I try to ask for it when you're in the inspection period, those 5 to 10 days where you can pull out without losing your earnest money. And Randy Whitaker, howdy. Buying new property, tenant lives there for 12 years and wants to stay, but the bathroom has subfloor issues. Should I have them move out or let them stay while it's being repaired? I've done several bathroom subflooring repairs with tenants there. It's very easy if you have 1.5 or 2 bathrooms, because subfloor repair I just have used handymen and contractors. It's a day, maybe 2 tops. They've been there for 12 years and they want to stay. I would use the binder strategy. And remember, the binder strategy is a conversation. If they say something ridiculous like, yeah, I think it's fair that the rent stays where it's at, and they don't want to do an increase, then they don't have to renew the lease. You don't have to renew the lease. If they won't go up enough, same thing. But so if they've been there for 12 years, where is the rents compared to area average? That might also help to determine whether you want the tenants to stay or not. If they want to stay, I usually don't want to disrupt the tenant's life and have them stay too. If there's only 1 bathroom, worst case scenario, I might pay for a hotel for 2 days while the work was being done. To me, paying for a hotel for 2 days is much cheaper than a $5,000 to $7,000 tenant flip with new paint, new flooring, and all the things that can come up from that, especially if they've been in there 12 years. So what makes the most sense to me would be try to make it as easy on the tenant and get the subfloor replaced, because a soft subfloor can cause an injury. And if you are aware of it when it's happening, speed is a factor. Get that repaired as soon as possible. Michael Smith, question. Dion, do you have or can you recommend a house hacking lease you could share? So leases are really state specific. I wouldn't want to share my lease with anybody outside of Washington state. And even in Washington, I think people should add what's more specific to their property. And house hacking has multiple forms. So if you divide a split level house into 2 areas, that lease is going to look just like an apartment lease or a duplex lease or a triplex. If you're renting by the room, there are some laws to your area that might be specific for that. I know that apartments.com, if you're a pro, has a lease option. BiggerPockets Pro members have options to get a lease for each state that were generated by attorneys. How I found mine originally is Washington State, and most states will have a website called Landlord Tenant Resource Page. And on there's usually copies of leases that have the verbiage that's required for that state. I would look through it and add things like, well, how was an eviction handled? I always add no water beds. Lesson learned. To make sure that it has everything. And then you have to go in and add things specific to your property, like especially if you're house hacking, let's say you were in a duplex and you're in this side, what portion of the yard is the other tenant responsible for? And when you move out, now there's 2 tenants, which portions of the yard is the tenants responsible for? Spell all that out in your leases. So I don't know that I have a copy unless you live in Washington State. And even then, it's not going to be specific to your property. Tiffany, howdy. Question, what would be different in executing the binder strategy on a rental house, rent out room by the room? So I've done both. It's pretty much exactly the same. If you're going to do it rent by the room, Todd Baldwin has some links to Roomies or something, where there are places where people advertise renting by the room. Look up rooms in that area that have the amenities that you offer, whether it's room with shared bathroom, room with own bathroom, or whatever, versus if it's a house hack where it's a single family house. You want to make sure that the binder, and it's at work because I just did the binder yesterday. So the first is a picture of the property. The second is a map with the areas in there. So that map is going to be a search of the area for rooms for rent, or townhomes for rent if it's a duplex, or houses for rent if it's a house. And then the next several pages are the rentals for that asset class. Like you're trying to find the most like thing, the number of bedrooms or the type of amenities, so that it matches. That would be the difference. So if I was going to do a binder strategy on somebody renting by the room, I would want to show them, here's what rooms rent for around here. If I want to do for entire units or houses, here's what units or houses in the area rent for. So that's how the difference is. Make it as close as you can, match what they're renting. Phil, you were so giving of your time already. Bonus karma points for you for getting me on the path. Nice. Sold home 220 cash. Pre-approved 400 for fourplex. Walkthrough of it next week. Awesome. Congratulations. Abdul Mateen. Howdy. I'm able to create 2K fake YouTube accounts and subscribe to your channel just to get to LCB. Exactly. Hip Harp one silver. No commingling of deposits and rent. Use 2 separate accounts, checking for cash flow, rent and expenses, and a savings account for deposits. Yes, that's great advice. J. Markey, would you be willing to share a copy of your landlord introduction letter? Yes. Email me. I will send it to anybody who asks for it. I literally Googled landlord introduction letter and then adjusted a little bit to match my information. And we are only 2 hours into this. And I think, unless my YouTube is broken, we're running out of questions. Would your LLC advice also apply to foreigners? There may be a benefit to LLC for foreigners if it somehow got you out of that foreigner sales tax that I ran into. Don't know for sure. So I would find out from somebody like an actual real estate CPA or attorney if that's a benefit to having an LLC as a foreigner. But again, that's only if the strategy is to buy, hold for a while, and then sell. So it would have the same benefits that it would for a non-foreigner, if that's a word, non-foreigner, citizen. If you have partners, the LLC is just designed a limited liability company to protect you from someone else's mistakes, need commercial loans, or hard money. So there are times it makes the same sense, but then it might also get you out of that tax problem too. J. Markey, Dion, do you run background checks on inherited tenants prior to first binder strategy meeting? I don't. I don't run background checks on any inherited tenants. Never have. I don't really do background checks on tenants. I use apartments.com. So when they apply, I'm going to get a copy of credit report and eviction history. I don't get a criminal background check. Don't care. I've never asked. If I had young kids and I was going to house hack in a way where I was close or sharing living space for whatever reason, I would definitely do the background check then, depending on what's legal in your area. But I haven't, because it's that 2 months of a vetting period. And I purchased a fourplex, which was owner occupied. So I had 60 to 90 days to satisfy the lender's requirement to intend to occupy. And I took the first month to figure out the tenants, to figure out which one of these tenants is the most likely for me to not want as a tenant since I have to move in. And it was night and day. I had one tenant that was a nightmare and nobody liked him. And they tried scamming me on a couple of things, saying they were the property manager and they got a reduction in rent. The record showed they were paying regular rent. So it was every bad thing that I would not want with a tenant, and including that the other tenants didn't like him. So that was the tenant I chose. So it's kind of with a screening period was my background check. And then I offered cash for keys. And I said, look, I'll pay you the deposit towards where you're moving. It's an owner occupied loan. I have to move in. And this is the unit that I want. So kind of a way of doing that, but it wasn't a background check. It was a current reality check. Phil, sorry, Dion, would you have some more questions? But I'm busy shoveling out this lovely winter storm warning. Nice. Just warning in Alaska. Fair enough. And if we have questions, remember the live streams next week when we do it, I'm going to try, I usually put it up a day before to let everybody say, set a reminder that Tuesday is the live stream. When you see that thing that pops up that says set a reminder, you can click on it, go in, and you can leave questions. So that gives you a whole day to kind of think of, this is what I'd like to ask in a live stream. That works on, Matt the Lumberjack Landlords, Michael Zubers too, if we put them up early. Con, how do you find property with tenants living in there? Right on the MLS. A lot of sellers try to sell an empty place, which means they usually have a month or two where it's empty and they don't have anybody in there. And a lot of buyers want to buy an empty place because they think I can fix it up and rent it out at area average rents. So they have that. When I bought the fourplex, so here's an order of operations to compare starting to years into investing. When I was starting, I never would have done this. I never would have. I wouldn't recommend this for the first 5 years. After the 5 years, when the income snowballs a thing, this was really safe for me to do. When I purchased my fourplex, this was before I took the money out of the retirement account. I had to use my retirement account as a reserve. To purchase the property, to do the down payment, the closing costs, the immediate repairs, everything that I had to do, it took my savings to $200. As a person who owned at the time, that was going from 7 units to 11. So I was purchasing a property. I was going to own 11 units. I had $200 on my bank account. That was my total to my name amount of money. I would never do that in the first couple of years of investing. One water heater breaks, you're on a credit card. One roof needs done, and you've got to finance it somehow. But here's why I did it. I have a W-2, so I had money coming in. I had 7 rental units that were cash flowing. I was house hacking. I was moving into a second house hack, so I didn't really have much of a mortgage payment myself. I closed on January 6th, 2020. So I got the prorated rents for January from the 6th to February 1st. I did not have a payment for January because we closed on the 6th. I got almost, like $5,000 in rent and didn't have a mortgage. When you close on a property, you get what's called a gap month. So if you close anytime in January, you do not have a payment February 1st. Your first payment is the first of the month after a full calendar month. So my first payment was March. So I got the rents from January and the rents from February, the rents from my other units, the money from my job. So from $200 in 1 month to over $10,000 in my savings account 2 months later, the ability to pay cash for keys to help a tenant move out, for me to move in, and I don't move my own stuff. I call 2 guys in a truck, so I paid for them to move. And I still, after 2 months, had $10,000 in savings. The income snowball kicks in at a certain point, and you can start doing things like going really low on your income or your money. But the people who prefer to buy a property that don't have tenants, that would have been 2 months with empty tenants, right? Who would want to do that? The people who want to spend another $20,000 or $30,000 rehabbing each unit and then renting it out at area average rents, 2 or 3 years might have made a little more money than me. But my way was very easy, very lazy. I didn't have to do tenant flips. I didn't have to do anything except for my one move into the one unit that I went into, where I really made a mistake. And I should make a video someday on smoke remediation. Good memories. But my properties that I'm finding with tenants in them are just on the MLS. Tim Crawford. Howdy. Do you watch The Rookie? It's actually one of the characters' names. First time catching your live stream. I'll try to watch all of your videos and great information. Thank you. Thanks. I would probably start with the 6 steps to investing in real estate. And then kind of look through for the ones that matter. And if you have any questions, you can always message me or email me. I put my email in the chat. I'll put it again before I leave tonight with specific questions. And I usually have a video for it. And I'll send it to you. Or if I don't have a video on it, that tells me that there's a question I need to answer. So thanks for coming to the channel. If it's your first time here, my goal is to help the average individual reach financial freedom and make work optional in 10 years or less, even if you're not starting from the best position. I wasn't. I was 40 and had made it to 40 without ever having $1,000 in the bank. I was laid off from a police department in 2008 because of the recession. I had gone through a divorce. I was a single parent with 3 kids, and during the divorce, I found out about $89,000 in bad debt in my name that I didn't know existed until the divorce. And it took 8 years to reach financial freedom. So bad debt free, all the bad debt paid off, and made enough work money from rentals to make work optional. I'm a little over 10 years now, and instead of just making work optional, the cash flow was like 4 times what it cost me to live. So my goal now is to figure out how I did this and put it in a context to share with people who want to do the same thing. And it's not that you want to make work optional and then retire and never do anything. That's a goal for some people. My goal is if you make work optional to where you have enough money coming in from a source where you don't have to sell your life 1 hour at a time, like it's money that just comes in and you can live on it. Now you can do any job you want, and you don't have to worry about what you're making at that job. I think the world's a better place when people do jobs that they want instead of jobs they have to do for the money. So, Tim, please keep me in mind for questions. I'm happy to answer them when they come in, not only in the live streams, but through emails and stuff too. And I lost where I was at. Okay, Rob. How much should it cost to cut down 3 20-foot tall trees and grind stumps? So you might be going with 2 service providers. A lot of tree companies will do 8 feet and higher. That's their purview. So they'll say, we're not a lawn care company. If it's under 8 feet, you have a lawn service, do it. 8 feet and higher, you're going to want to get estimates from at least 3 tree trimmers, 3 arborists, or 3 tree services, depending on, again, which colloquialism is used in your area. I use the Thumbtack app to figure that out. So it'll depend on the type of tree. Is it a fir tree that can be fell? Is it an oak tree that spreads out over buildings? I mean, there's, it's going to be roped down. So the estimate will depend on the type of tree, the structures that are around it, the difficulty of getting the trees down. So that's the first one. And I use the Thumbtack app to find contractors, get quotes, and read reviews, even tree services. And then you're going to want probably some tree services will do this, but most don't have a stump grinder. So you're going to want a stump grinding service, which again, you find through Thumbtack. And you have the tree service take the trees out, and you have the stump grinder to grind the stumps. Find out the number in your area that you call before you dig to figure out what water pipes, fiber optics, or gas lines go anywhere near those trees before they'll grind the stumps. That service is free, but each area has a specific number, and I think it's like 811 or something like that, or 888, or no, it's not that. It's some number. Google it. Before you dig is what they always call it. Get the number for that. And stump grinding usually charges by the inch, $1, $2, $3, $4 per inch, depending on the area and how big the stumps are. Sometimes the bigger the stump, the less they'll charge, because getting the equipment there is the cost. And then it's just the work and how far down you want to go, 6, 12, 18 inches as far as grinding, depending on the machine they can bring. Most stump grinders are backed up behind a pickup truck. So if it has access to a pickup truck, it's a lot more cost effective. If it's in a backyard where you've only got a service gate to get through, like a regular human-sized service gate, there are stump grinders that can be taken in, but it's a lot more work, and there's very few of them, so those prices are usually a lot more expensive. So sometimes it's worth knocking a fence down to get that ground and then put the fence back up. So I can't give you an exact quote, but I would get at least 3 different quotes on both of those 2 different services. Michael Smith. Question, Dion, if house hacking by the room, do you have a recommendation for house rules for behavior and what consumables the landlord supplies? Yes. First, I recommend consuming as much of Todd Baldwin's content as you can. Todd Baldwin. He's here on YouTube. He lives in Seattle. He rents by the room. He's been on Millennial Millionaire. I think I actually called his episode the Millennial Millionaire. He does that rent by the room. He provides a cleaning service. I think it's weekly that comes in and cleans the common areas. He provides certain things, but he makes so much money renting by the rooms that it justifies those expenses. These are not things he goes and does himself. He has services that provide that. And so each area might be a little more unique. So when you're renting by the room, one of the things to look at is and it's some of Todd's advice, is you want as many bedrooms as you can get, but it's just as important to try to get as many bathrooms as you can. Shared bathrooms is the problem that usually pops up between tenants, more than a shared kitchen. But if you can have the most number of bedrooms that have their own bathroom, that's your least amount of turnover and your least amount of tenant problems. So that's where I would start Todd Baldwin's content. And his YouTube is just his name. Who prepares the estoppel agreement? I read it can include who owns a particular appliance, tenant owns the existing blinds, etc. Do both tenant and seller sign? Would you walk it? Would you walk if discrepancies? I don't know that I would walk. I would dig deeper. The estoppel is usually prepared by the landlord, not the tenants. I don't know that tenants, I've never seen tenants sign anything on the estoppels. Don't know, depending on your area, if you could request or demand that they also agreed that this is what's actually happening. A contributing factor to the one deal that I did walk away was the estoppels. The lease said the tenant was paying like $1,400 a month for a 2-bedroom, which in that area was a little high. The normal, and this was years ago, was like 11 or 1,200. And paying 14, I was like, wow, that's a good rate. And talking to the tenant, he said, that is my rent because I didn't pay a deposit. The landlord was super nice and he let me put my deposit out over the first year. So this tenant expected his rent to go down a couple $100 at the end of the current lease. That meant, but there was a bunch of other things wrong with that property. It appraised $50,000 low. There was at least $50,000 worth. Every joist was rotted by some water damage, so the whole flooring needed replaced. There was like good reasons to back out of that deal, and owner's honesty was a concern as well. And we are at 2 hours and 20 minutes. I'm gonna have to take a drink, so at least I waited this long. Can't smell vodka through a microphone. Okay. Pallavi, Dion, would it be okay to set rules on month-to-month renters on parties limiting friends? My leases have a thing that says anybody who stays for longer than 5 days has to be on the lease. So you can kind of limit the duration that friends stay there. You can write anything you want in a lease if you both agree to it. I say you can write anything, but also check your local laws. I'm sure that there are some restrictions that you can't put into a lease. An example would be places that have rent control. You can't put in a lease that says, every year your rent is going to go up more than the rent control allows, right? So know the local laws. You could put, limit parties to. I would think I would limit parties to a certain time frame. Like if you have a party, it has to, people have to leave by 9 or 10 o'clock because you have neighbors. Yeah, I think you can write that in there and explain when you do a lease signing. I go through page by page, have the tenants initial each page, and as I go through, this is the page that says, this is for my protection, that you can't have water beds. And then I go through, well, this one's for your protection. It says if I sell the property, I can't cancel this lease, which means the new owner is bound by the duration of this lease, which is another way to get the tenants to want a 12-month lease. So I go through each one and explain anything that you're putting in there that is very specific, like I don't want more than 20 people here at the house, and because of parking or whatever, and parties can't be after this time, and just set expectations early. Danielle McCullough, howdy. For our first multifamily, based on your experience, would a credit union be preferred over a large bank, Bank of America, Wells Fargo? So towards the beginning of this video, in the first 32 minutes, which I tried to make 10, we got to 32, so oops. The order of operations was learn to save, work on credit, pick a strategy, talk to a lender. When we talk to a lender, here's the order of operations for lending. And it's in the beginning of the video too, but I'm not saying you have to go watch that because I'm going to do it now. I go to a large bank, Wells Fargo or Bank of America, because their lending criteria is the most standardized, and I get pre-approved for what they will loan on. That's what I use when I'm making my offers on properties. When I finally get one accepted, and I usually make about 20 before I get one accepted. I have had sometimes it's the first or second, but it's usually in about 20. Then I go to other lenders, and I've had the best luck with Guild Mortgage and Fairway Mortgage. And in the beginning, I went to credit unions, but they never had rates that were very good, and their terms weren't very good. So I never went with a credit union. The first 3 loans went to Wells Fargo because I would go to Guild Mortgage and Fairway and the credit unions, find out their best deal. And if any of them beat Wells Fargo, I would then give Wells Fargo the benefit of the doubt and say, you have an opportunity to keep my business. Here's what Fairway Mortgage is offering. The first 3, Wells Fargo was able to beat their counter offer. They all had to see it in writing. And then since then, Fairway Mortgage has beat Wells Fargo to a point where Wells Fargo couldn't compete. So the 3 next deals and 2 refinances have been through Fairway. Personally, not good luck with credit unions, but I would check with multiple lenders. And now I've been working with Matt the Mortgage Guy's team. So Matt the Mortgage Guy has a YouTube channel, and he's got a team all over the country. And so they're going to be in the competition pool for getting my business. Hope that makes sense. And it sounds like a lot of work, but it's literally between 5 and 10 emails total to get all that done. And think of this. If you were going to add a $5,000 deck, we would probably talk to at least 3 contractors and get quotes and find out who's got the best rate and best guarantee or whatever matters to you, or timeline. 5 to 10 emails to make a 30-year commitment for hundreds of thousands of dollars is definitely worth me taking the time to do that back and forth to get the best interest rate. And sometimes the interest rate is great, but you also want to look at buying the rate down with one lender might be 50% the cost of the first one. And so sometimes that's been the contributing factor. Ben, if you found owner finance, how might you structure the deal? Imaginary numbers. Part of that's going to depend on what the seller's looking for. If they have any kind of mortgage, I'm either going to want to pay that mortgage off or get a mortgage for that amount and then do the seller financing for the remainder. I'm going to want to make sure that my down payment gets the seller what they want. So sometimes they might want a nice round number of 50,000 or 100,000 or whatever they want as a down payment. Sometimes they don't want any money at all because they're trying to avoid the capital gains hit. But they're going to have agent fees, because even with seller financing, I'm using an agent. So there's going to be agent fees. I want to make sure my down payment covers the agent fees so that the seller's not writing a check to walk away from an asset. They're going to sell it to get the consistent payments, avoid the capital gains hit. I want to pay interest to them instead of the bank. My seller financing letter spells all that out for them. But what's really important is listening to the seller to find out what matters to them. Is there an amount of money they want to walk away with? Do they need enough money for the down payment for their next place? Do they want enough money just to pay for their move because they already own the next place? What matters to them? And structure it that way. My goal would be to set it up for 30-year fixed rate debt to the seller. And I will put in there a 5-year early prepayment penalty to where if I try to refinance in the next 5 years and just go get you a big lump sum and pay you off, then I'm going to give you an extra 20 grand because they're going to get that tax hit. Whatever the reason is to make them more comfortable, more likely to go through with the deal. Hopefully that helps. Hip Harp One Silver. Do you ever check the county's sex offender list? They have to live a certain number of distance from school and daycare facilities here in our state. I don't. I did when my kids were young, so I might have. But when I did my duplex house hack, I did it across the street from a school. So that was kind of my way of around having to do a background check because I know you can't live next to the school, or I had a justifiable reason to do a background check. But as far as my rentals go, I've never checked. In my 16 units, I have 2 renters that have kids. One is in a single family house, so they don't have neighbors. So I don't have to worry about any of someone in the next unit being the problem. And my other one, that duplex is right by a school. So same thing. So I guess I probably might consider it if I knew I was going to have tenants who had young kids. I might do the background check, or at least check not background check, but the county's sex offender website where they got the little pins on the map kind of thing, which are not all that accurate. I was a police officer until 2008, and I know our area, they had pins years after that person had relocated. So those websites are not always accurate. Pam Holbrook, howdy. Thank you. Ben Tipton, how do you approach your tenants with cash for keys? I would judge the situation. If it's a tenant I want to get rid of because they're a pain, I'm just going to go, look, you can either get evicted or you can move, right? Because if they're a pain, that's not my goal. But if I'm going to do an owner-occupied loan where I take in and I'm displacing a tenant, even if they're the one that made the most sense to get rid of, I'm disrupting their life. So that's where cash for keys made sense. And I didn't do a lot. I said, look, I'll do $1,000. I just added that into my cost to acquire. I will pay that towards the deposit of the place you move. I don't want to give the tenant money and then have the tenant stay and force me to go through an eviction where I spend the money and I'm just losing that money, right? But if I pay towards the deposit, then I know they're actually moving. And if they don't actually move, I can go there and get my money back from that place. So that's how I handle cash for keys for the tenant. I say, look, I understand it sucks to move. And sometimes part of the problem with moving is not having the money to move. So would it help if I gave you $1,000 for your deposit towards your new place? Tenants are not expecting that. This guy kind of broke down, got emotional, and was really happy that I was willing to even help them. So it was the right thing to do. Julie, how much are you paying for landscaping for your fourplex? It is the only property that I do landscaping at. All the others, the tenants take care of their own thing. I'm house hacking. So for the first year, I did it. I have all the electric stuff, but the lazy kicked in. And I have a service right now. It's $150 a month. And I think I do 200 because I give 50 to the guys while they're here. So, or 25, but they're here twice. So it's a total of $200 a month is that's what that costs for the fourplex. Michael Smith, video suggestion. Thank you. Appreciate that. It would be intriguing concept to invest in real estate instead of a 401k, IRA, stock, etc. It would be interesting to see growth over 10-year or 20-year target in your definition of retirement. Okay, I can definitely do that. It'll be very similar to my video that says no retirement accounts, and then it has a red circle with a line through it. Because I do talk about, here's what it would look like in a retirement account, and here's what it's doing in a rental. But spelling it out and saying, you're wanting to retire retirement accounts, you're hoping to be poorer when you hit retirement so that you're in a lower tax bracket, you're hoping for taxes to be less in the future, have you met the government, like all the negatives to retirement accounts. And then like last week I did the start of the live stream was, here's what a rental property paid me in 1 year, to break down what it did in 10 years. So not to get into like the cash flow appreciation principal pay down and all the details of last week, but the total was $131,000 in 1 year that one property had gains for me. So over 10 years, that would look significant when you compare it to what a retirement account would do. That is a great idea. Danielle, as a multifamily investor, what is it like living with your tenants that you manage, and have you done this before? So this is my second house hack. My first house hack was a duplex. I lived next to the tenants there, and our driveways were close to each other. So I saw them once in a while. We'd walk in and out together. I currently live in a fourplex where there's a townhome style. So they're all like this. I don't like over-under properties. I like side-by-sides. Less noise complaints, less tenant issues. And if there's a plumbing problem, it affects one tenant instead of two. I've seen, so there's 4 units. I live here. There's 3 units. One guy I see once a month because he pays in cash and like 20s with glitter on them, so I don't ask questions. I don't like to accept in cash. The only thing that I do caveat with cash is give a receipt, like a handwritten receipt. But this tenant's closest to me, I've been there 2 years now. January 6th hit 2 years. Well, no, February. So I'm coming up on 2 years because it was a month before I moved in. I closed on the 6th, moved in February. I think I've seen them 3 times. The first time they came over, because they watch my YouTube channel, and they asked if they could raise their rent. They did the binder on me, and they did it really well. They said, we don't like living month to month because we saw that you had the other person move out, and we're afraid that you're going to do that to us. So can we do a longer lease? And if you do that, can we please, add $155 to our rent? So that was fun. It's the first time someone used the binder on me. It was the smallest amount that the binders ever performed, but it was backwards, and I wasn't intending on doing it. So, and then I've seen them once for a lease renewal, and then one time when they were getting in their car. I never see them. So it's good. Yeah. Jay Markey, thanks again. Got to head out. Overnight LTL driver. Catch the rest on replay. Awesome. Have a good night. Be safe. That was what I did for a while. When I left the police department, I got hired as an LTL driver for Oak Harbor Freight Lines. Was on track to make $115,000 as a local driver. And they went on strike. So, no fun. Larry, upon completion of purchase multifamily property, is it legal to request credit reports, criminal background reports, and other files of inherited tenants from previous landlords, the seller? You'd have to check locally. I'm pretty sure each state is different. I know that in some states you can't do a background check for employment, for living conditions, and whatever. It's because it impacts at a greater rate people who are economically disenfranchised. So there's a social reason for that. So check locally on whether you can or not. I've never done it. Like I said, I have that 2-month period to screen them. That's what I care about. Yeah, so that's going to be really a local question. Milion, howdy. Thank you for your time. I'm sure it could be million. So, Tiffany, Dion, have you or would you put in outdoor improvements like a swing set or sitting area in the yard of a multifamily property you own? I have done like a park bench type thing with the benches. I haven't done a swing set. What else have I done? I let a tenant put in a tree house. So I didn't put it in though. Tenant did that. And he's a carpenter. So I would like move into that tree house. Yeah, swing set or anything where I think an injury could happen. I wouldn't want to be the one who added it. I believe I would allow a tenant to put in a swing set. I also require renter's insurance, so I'd make sure that was on there. Yeah, so I haven't done much other than the one park bench type thing. I lost where I was at. Felt no Mountain Dew. Crazy. I know. How are we going to stay awake? Rob, have you seen Vox Machina on Prime? My daughter reached out and told me that I should watch it, so it is on the list. I have not seen it yet. It is, in the briefest description I got, an animated RPG, basically, like a D&D session. So I have not seen it yet. Pallavi, I take room-to-room renters. Nice. You make way more money. Like I said, I have a friend who's retiring, and I want him to do a 6-month lease with his current tenant. And as soon as he retires, then buy the room because it just makes so much more money. Does have a bit more hands-on involvement. The real estate X factor, if you know what that is. If not, let me know and I will explain it. And there goes the voice again. Beverly Ho, howdy. Random question. Is the compensator gas or diesel? After a couple of years of ownership, would you buy the same again? I'm currently researching HD trucks. It is diesel. I would absolutely buy it again. But that's because of the size of the portfolio and the income snowball, and that for the past several years, since 2019, 18, 19 now, I've been putting $700 into an account for the next vehicle purchase so that I don't have car payments, right? A duplex is producing the cash flow that is specifically going to buy my next vehicle. And I like to buy nice vehicles. I drove like old Jeep Cherokee and old Jeep Wrangler for years that were falling apart, and I paid a couple $1,000s for each one of them until the income snowball kicked in. But I had to have multiple vehicles, so one of them would run well enough to get me to work. So I had that time period too. But once the income snowball kicked in and I set aside the money and I literally bought a duplex and said, that is the vehicle duplex, which when I first purchased it, it was cash flowing a little over $700 a month. Now it's like $1,300 a month. So could definitely get a nicer car. But yeah, it's a diesel F250. Everything you can imagine: massaging seats, heated seats, full leather. It's some kind of, I want to say Billy Ray, but it's not. It's something else. So the kind of music edition where the whole back seat is a speaker, because I listen to audio all the time and I want to be able to hear it no matter where I'm at. As much as a pain as the DEF systems are on the semis for the trucking school that I run, I like the DEF system in the F-250 because basically it's producing cleaner air than the air that's in Tacoma. So I don't feel like I have this big, huge carbon footprint from that type of vehicle. I'd definitely buy the F-250 again. Although if I wasn't going to jack it up and I wasn't going to put the compensator on the back, which is the actual name on the back of my truck, I'd probably get the F-150 with the Ecotech engine, the 6-cylinder, because we've got one for our trucking school, and it's got so much power. In 4-wheel drive, it will peel out all 4 tires at 40 miles an hour. I like that truck. So if I didn't want the big and flashy one that I have now, yeah, probably F-150 with the Ecotech engine, if that's what it's called. I want to say EOTech, but I'm pretty sure that's the sights on my P90. Probably switching those around somehow. Danielle, thank you always for answering our questions. We appreciate all you do along your collaboration sessions with One Rental at a Time. Great content as always. Thank you. I appreciate it. And I really like working with Mike and Matt. Those guys, they are mountains of information, and I benefit from trying to share my information while they're doing it too. And they do prompt me to move past the lazy and consider things like more expensive properties or doing a home equity line of credit or a refi to put the money to work and get a better, because I'm getting a really good cash on cash return. My overall across the portfolio is over 20% now, but my cash on equity return is not very good. And knowing people that are doing what I want to do helps. And so that's why I think watching content like this, if you would like work to be optional, if you would like to have buy and hold rentals, if you'd like to know how to screen tenants and how to do all those kind of things, this time together will help. And for me, that's the same. My time with Matt and Mike, the three amigos, helps me too. Million, cheers. Rob, are you biased against glitter? No, I just, it makes me wonder. Phil, they pulled their binder on you, deserve the discount. Yeah, that's true. And like I said, they approached me and I wasn't planning on it. And I want the long lease anyways. And to be fair, we did the binder at the end of that first lease again. And now they're where they should be. Aldo Tapia, howdy. After doing a cash out refinance, how long before I can apply for a mortgage for another property? Tomorrow. Lenders aren't all made the same and they don't all have the same rules and regulations. So which lender you can use, some of them might want to have reserves that are seasoned and have been in your account for more than a couple of months and have a known source. So your debt to income ratio, your work history, your credit score are going to be the factors that determine if you can do. Some people will do 2 mortgages the same day, sign on 2 closings the same day. It's a little harder when you first start out because your first property impacts your debt to income ratio. Once you have rental income on your tax returns, adding properties, and you have more than 3 months remaining on leases, lenders can look at the rental income of the properties you are acquiring in your debt to income ratio. So you can add multiple. So it's kind of a timeline there. What does your personal situation look like? Debt to income, credit, work history. Do you have seasoned reserves? And have you had rental income on your tax returns? The first 2 years, it's a little harder to scale because you're a gamble. The lenders don't know if you know how to find a lease, screen a tenant, place a tenant, collect rents, stick to your lease, like what it actually takes to be a landlord, take care of the property. But once you have 2 years of tax returns and you show consistent leases, now the lenders can sit back and go, okay, so this is a person who gets the fundamentals, and now we can readjust the risk by saying, what is the rents from the new property going to do to the debt to income ratio? North Colorado Dawn, howdy. Hello, everyone. Just finished going through 6 appraisals. I have a headache. Yeah, I bet. It still beats being trapped in a 40 to 60 hour a week job that you don't like. But not today. Larry, by the way, The Count of Monte Cristo was excellent. Thank you. Thanks. It's almost one of my favorite movies. Well, it's probably the only one. There's some meme that goes around Facebook of which movies have you watched more than 10 times? And I would think it's probably one of the only 2 or 3 movies I've seen more than 10 times. don't tend to watch movies over and over and over. I like to watch series or listen to series. Darkest Dreams 21. Howdy. I currently work Monday through Friday, thinking about weekend CDL training. Is that what you did? How long does it take? Definitely want to take more money for real estate. Also, hello. Howdy. So weekend training for CDL will depend on the state. If you're in Washington State or in a couple of states where they require 160 hours of training, that would be difficult. Most schools like ours will offer evening training. And we do train on the weekends, so if you miss time during the week, you can make it up on Saturday, but it's not really enough training on Sundays or Saturdays and Sundays for it to stick. Like, this is a perishable skill that you need to develop. Like, backing all comes together way late in the training. The states usually require double clutching, even though it's easier to float and better for the vehicle to float. Argue with me in the comments. But there are some states where there is no training requirement and you just have to be able to pass the test. So they offer a 1 or 2 week course, and that might be a little easier to coordinate over the weekend. So it depends on where you live and what the schools offer. Most employers, though, for local driving, the actual good quality jobs are going to require a 160-hour course. So even if you're in a state like Texas that doesn't have an hours requirement, if you want to work for Old Dominion, Oak Harbor, right away, one of the local LTL companies, they're going to look at your 160-hour cert as more attractive than somebody who just went to a school for 2 hours and passed a test. So you have options. Pallavi. That was a typo. I meant to say regarding my previous question on room to room, but you read it as month to month. And don't know about the X factor. Okay, so the X factor is, so it's an X factor like this in real estate. So it's almost an XY axis, but they go like this instead of that way. Each line is how much money you're going to make. The further you go up the line of how much work you're willing to do, the more money you will make. At the top of the list is usually, this is kind of the order I put it in: self-managing, short-term, by the room rentals, then self-managing short-term rentals, then property management for short-term rentals, then self-managing long-term rentals, then property management for long-term rentals, then syndications, then real estate investing trusts like a REITs. So the further down you go, the less your return is going to be. The higher you are to the top, the more your cash flow, appreciation, principal, all that stuff is going to be more. That's that line. Then the other line is the risk. The more risk you're willing to take, the more money you're going to make. A lot of times people talk about the 1 or 2% rule, which are both flawed, don't work, or outdated. Have a video on that. The 1 or 2% rule of properties exist in a war zone. If you're willing to take the risk of getting shot to go collect your rent, you're probably going to hit the 1% rule. So the more risk you're willing to take. If you invest in properties where there are all kinds of reasons why you think, so next to Arizona 2 years ago, people looked at the market and said, prices have gone up so much, we shouldn't buy here anymore. That it's just too high. Since 2013, people have been saying all across the country, prices are too high, don't buy. But in Phoenix, everybody was saying these prices have gone up so much, nobody should buy here. Rumors came out about that chip town that's being built west of Phoenix, and then property values there have skyrocketed. So for the last 3 years, in 2021, Phoenix saw 30% appreciation. So it's one of the top cities in the country on appreciation, right? That was a huge risk to keep investing in a place that everybody was saying is at its peak and will never go up and it's going to come down and it's going to be a crash and a correction. You took a big risk by investing there and it paid off. The more risk you're willing to take, the more money you're going to make. The more work you're willing to do, the more money you're going to make. So there's a thing. I like to be medium range risk. I invest where there are multiple economic drivers. I keep my properties at least 10 miles apart, so I'm pulling from different tenant sources. I have all these strategies involved in my investing that help protect my portfolio. So I don't get the great returns. Like I'm not investing in really risky areas. I do middle of the road investing. I am self-managing a long-term tenant. So the only things below me would be property management, syndications, or REITs. So I'm kind of in the middle of the X. Slow, consistent, easy to reproduce. Didn't get rich quick, got wealthy for sure. Like that was where I wanted to be. Further you go up on the work, like short-term, self-managing, you're going to double and triple what I make. Hopefully that made sense. I should do a video on that. North Colorado Dawn. I figured you would like the Cummins engine best. Drove truck for 17 years. Couldn't tell you what type of engine. I could look at the placard on an engine. Don't know Cummins, don't know. I'm sure there's other names because I don't know them. But I can get in a truck and I can drive 30 to 80 feet and I know what RPM range this transmission is going to work in. The driving is very simple. I am not the mechanic. Everything inside that hood belongs to the mechanics. And I call them and I say, it's making the weird sound. That's as much as I know about the lazy truck driver. That's why I became a truck driver. That's why I joined the Marines. There's all these lazy jobs you can do. If you want, there are hard physical jobs. You want to go to work for McLean, you're going to load and unload your truck with a hand truck. You want to work for Oak Harbor Freight Lines, being what they call a line haul driver. The entire time I was there, I opened one trailer. The rest of the time, I just moved trailers around. I sat in a truck and listened to podcasts and educated myself. But yeah, I don't know. The Cummins, I know there's a Mercedes engine, right? And I want to say Peterbilt, but that's a truck brand, not an engine name. I'm not a truck or car guy, like I'm not a sports ball guy. Okay. Yeah. And where was I at? Okay. Randy Whitaker. Dion, thank you for the information. Thank you. Abdul, to be fair, your favorite video. So it's actually a play on a show called Letterkenny, which, if you can keep up with the pace of the jokes, it's a hilarious, but it can't be background. It can't be while you're working out. It can't be, you got to be watching that show. It's brilliant. Raj M. Howdy. Dion, you are looking younger and younger. It's the white in the beard. It's the youthful white. Thanks. Ryan took another message out, and now I'm going to lose sleep because I always wonder what he said. Ryan, howdy. Would you ever consider purchasing a portfolio from someone, a 2-2 side-by-side, 2-2 flat, 2-bed, single family? I would absolutely look at buying somebody's portfolio. I'm actually in what I would call the courtship phase of a gentleman who's trying to get out of the rentals, and he has 6 duplexes. So I'm looking at a seller-financed portfolio purchase, but it's going to take me, I would say, 6 months to a year to get the person comfortable with how we want to structure this. So I'm looking into that. Phil, as an ex-con, I must say I like your taste in The Count of Monte Cristo. That's a beautiful show. And I'll explain one more time just in case somebody ever missed why The Count of Monte Cristo is my favorite movie and why financial freedom means so much to me. It's actually a movie about a guy who becomes so wealthy, he can dedicate the rest of his life to revenge. It's amazingly beautiful. Raj, Dion, you are the best teacher in real estate. Thank you. Thank you. I appreciate that. The content that I'm trying to get across would have to be content that would work for me. And I think I'm really simple when it comes to learning things, which makes me, I think, a really good truck driving instructor. I have to break this down into simplest terms. Real estate, I can break it down into simplest terms. Same. Daniel, howdy. You emailed me today. Awesome. Cool. Jose Castillo, howdy. Always great info. Thank you. Pallavi, thank you on the X Factor explanation. Awesome. Thank you. Lumberjack Landlord. Howdy, Matt. Tickle that like button. Oh, I read folks is a different word. He's earned it. That's the thing. So that's the thing I want to start saying in my videos, if I can remember going forward, is we say things like, can you subscribe? Because the more subscribers, the more we feel like people want our content. And can you hit the like button and leave a comment? Because every time you leave a comment here or in the comments section, this is the live chat, or you do the little comment section, it tells YouTube there is interaction. Somebody liked our video. So even if you go into a video that you hate and you say, hey, I hated this video, YouTube doesn't read the words. It just says, hey, there was action. Let's promote this video some more. It helps us get our content to more people. Do things like yesterday, hitting 8,000 subscribers. That's amazing. I appreciate that. But a lot of that comes from hitting the like button. So what I want to say in my videos going forward, if I can remember, because of my memory issues, I'll usually forget, but I'm going to try to remember. If the information and the time, effort, and energy that I took to share this information has earned the like button, hit it. And then I usually add, if you hate my stuff, if you hate this content, hit the dislike button. Hit it twice so that I know for sure you hated this video. So we got a few more minutes left. I want to make sure if there's a chance to get any more questions out, we want to get to them. My voice has lasted a long time tonight. That's good. I spent the whole month of December unable to talk. If you watch any of the live streams, like 8 through 10, it was rough. It did not go well. Tim Crawford saying, hey, Lumberjack. Christine, howdy. Love your content. I'm East Coast. Got to say goodnight. Thank you for hanging out. And yeah, I appreciate that. I understand it. It's late. I try to start it at 4. I literally leave work early on Tuesdays to get this started, to get everything. So we're not keeping people up on the East Coast till midnight. Julie, you seem very well-rounded. Did Julie just call me fat? Am I round? Thank you. I appreciate that. Lumberjack, Tim Crawford. Hello, sir. Pallavi, got it, Lumberjack. Thank you. Raj, I like to hit it twice. Thank you. Ryan Loftus, howdy. All 3 of the properties in the portfolio are on the same block. Would that change your interest? I know you've spoken about keeping your unit somewhat distanced. It wouldn't change my interest. It would change my deeper dive. So when you see something that hits the math metric and okay, this gets the return I'm looking for, then we look for, is it in a war zone? Is it on a noisy street? Is it next to a thumping club? Is it, all the things that could say, these are the other detractors. Is it over, under, the other things that matter? Are there economic drivers around there and sources of tenants? So I like them spread out. I like them side by side. I like, those are the wants, right? Anytime something is not there. For instance, I was doing the Zoom portion of the BiggerPockets boot camp that I'm a teaching assistant for. And I said, hey, let me pull up a video of one of the searches from one of my real estate agents. And we're going to look at this property and I'm going to tell you if I like it, if I don't like it. Now I look at so many, I expected to not like it. But I found a triplex that popped up and it had like a 19% cash on cash return, which is really good in my area. It was an over under, which I don't like. But the return was so good, the area was so good, and it was distant from everything else was so strong that the one thing it had that I don't like didn't matter. So if all of those properties are close together, do they have washer dryer hookups inside? Are they the number of bedrooms that make the most sense for that area? Do they have garages if that makes sense for that area? How many economic drivers are close? Is it, if it was next to just one and they were all close together, that's a bigger risk. But if they're all close together and you have a base, a port, a college, a hospital, a terminal, a Boeing, an Amazon or something, you've got multiple drivers, then I don't care so much that they're close together. So I would still look. It would lower the desirability based on the distance that I like to keep them apart. But if the other factors were strong enough, I would absolutely still pursue it. That was a good question. Shankar, howdy. Ever planning to invest out of state? Kind of. In 2018, 19, we were looking at putting a campus for our truck driving school in Arizona. So I looked at doing a small multifamily there so I could snowbird house hack, literally house hack out of state. We put a campus in because we couldn't find a location. So I stopped looking in Phoenix. We couldn't find a location for the CDL school. I actually found several properties that I would have bought. They were on the MLS. They got the return I was looking for. And then the property values went up so much that I should have bought them. But we ended up putting a campus in Twin Falls, Idaho. So now I'm looking in Twin Falls, Idaho and Washington for my next purchases. So I will be buying out of state. But the difference is I'm my boots on the ground. Whenever we're looking to invest at a distance or pick a market that we don't live in ourselves, we want to either used to live there and know the areas, can go there ourselves because we know the areas, or have somebody in the area that we trust and we know them well enough to where the test is this person going to come to my funeral? If I know them well enough to where they're going to come to my funeral, then I trust them enough to be in the area. They have to work in the industry, be an agent, be a property manager, something where they're in the agency, in the investing world of real estate. Why did my brain shut off? To invest in that distance. So since I'm traveling back and forth to Idaho, then I'm looking at investing there. To pick a different market, it would either be somewhere I was going or somewhere where I knew somebody that I trusted to have boots on the ground. Also, East Coast, getting sleepy. Much appreciated, Dion. Have a great night. Ciao. Phil, thanks, Dion. Can't wait for your reading of Zuber's books. I've got it here, and my voice is finally back to normal, so that is underway. And I think I'm going to do it in portions and send it to Mike that way so that he can get it, because it's going to take a while. It's a big book, good information, but North Colorado Dawn. Pretty slick, Dion. If you hit it twice, it negates itself. Really? That's so weird. Who would have thunk? That's just weird. Ryan, thanks, Dion. When you answer my questions, I find myself nodding as if you're actually speaking to me. I appreciate all of your time and efforts. That's perfect. That is exactly the reaction I was going for. And I'm hoping that even the people who didn't ask that specific question nod at the same time, because that's the goal. It's like, this is a conversation between us. We hit the 3-hour mark. I'll give it like another minute. We hit 100 likes too. I appreciate that. Is there anybody here who wasn't here when I gave the bartender advice in this video? Okay, so we all saw that bartender advice. Perfect. Okay. Oh, okay. Well, there's a few people here. Must be a lag in how long it takes the video to post. So I did a thing when I started this video of, if I got to 50 likes, I was going to give my bartender advice for investors. And so somewhere around, I think, an hour and a half, it's in this video. If you've been here from the beginning and you've seen it already, I totally understand if you're going to check out now, because what I want to do is give my bartender advice to investors. Since we hit 100 likes, that doubled the 50 that I was looking for. So here's my advice, like a bartender talking to an investor. If you're watching my content, there's probably people watching this who are in an investing position where they would like more. That's why you're educating yourself. That's why you're taking the time to absorb this kind of content. So you would either like more units so that you're getting more cash flow, more appreciation, more principal pay down, or you want more cash flow so that you can make work optional or reach that goal. So we're in a position where we want our portfolio to grow. So we want to get there from here. So take a minute and think, what is that goal? How many units are you looking for? If I'm at 16, is my goal to have 20? Is my goal to have 30? And how many do I want to self-manage? If my goal was cash flow and I want $5,000 a month in pure cash flow after all expenses to make work optional, or 10,000 or whatever. So the goal would be this many units or this much cash flow. So kind of think for a second, what is that goal? So you've got it in your mind what that goal is. I want you to picture yourself there. You have achieved 20 units. You have achieved $10,000 a month in cash flow. You've got it. You've got the portfolio to do that. Because here's what happens. When we're there, when we got from here to there, we got to there we were trying to get to, our brain will say, what's my next goal? I have 10,000 a month in cash flow. Work is completely optional. If I double my portfolio size, my kids are going to inherit multiples of appreciation and tenant pay down. And this net worth that they're going to get is going to be multiple millions instead of $1 million. If I take my cash flow from 10,000 to 20,000, I can donate more. I can pull a mat and get the Lambo car. So once we get to where our goal is now, the goal there is to set a goal we're going to try to get to. No matter where we are, our goal is to get to the better place. More appreciation, more units, more cash flow, whatever the goal is, make work optional. Once you get there, you're going to be looking at what the next goal is. So the real beauty and the way to make this whole journey of investing worth it is to learn how to love where you are right now. If you haven't bought a rental yet, and you're about to buy your first one, this is the last time in your entire life that you won't own a rental. If you have the cash flow that you're looking for to make work optional, you're at that stage where it's finally optional, and now you have to think of what to do next. But that's a huge goal to accomplish. If you only have half the cash flow and you're thinking, well, once I get there, I'm going to be so much better. You have half the cash flow that you're looking for. Figure out a way to look at what you have now as an investor Even if that's, I've just learned how to save. That's the first step. The order of operations to getting into real estate. Whatever stage you're in is an accomplishment. That's my bartender advice for an investor. We always focus on where to go next, but we never think that when I get there, I'm just going to be focusing on where to go next. And I forget to enjoy where I'm at. With that, I'm going to wrap up for the evening and hope you guys have a week full of awesome. Secret squirrel information for you. I'm going to do a video tomorrow with Michael Zuber where I get to express how much of a nerd I am. Because in his live this morning, his update, he asked if he knew anybody who was into the metaverse. And I am a huge VR nerd. I get most of my cardio workout in VR. And so I get to explain, not as an investor in the metaverse, but as a consumer, what the evolution of the metaverse has been for the last 30 years. And here's a joke that everybody missed last week, I think, because it was way too subtle. Someone asked me what my opinion of NFTs was. And I said, I didn't bring it down. I have a poster here that says you have a choice. You can either be good in bed or understand NFTs, right? And I made the joke and some people laughed and said some comments, but then I took 5 minutes to explain NFTs. So I had a choice. I could either be good in bed or understand NFTs. And then I explained NFTs. So with that, I'm going to be embarrassed and log off for the evening. I really want to thank everybody for coming and hanging out. Hopefully the information was helpful. If you came in late, you can always go back and do a replay and speed the speed up to 1.5 or 2 times the speed to kind of get through the content, because I tend to talk slow because I'm trying to get my thoughts together to make sure I say something that's articulate and useful. So we got another comment from Jones. I'm home, Dion. Maryland sucks. In your opinion, what state is the best to be a trucker? I would avoid the West Coast or the East Coast and California. But that's just my personal experience as a driver. I like Washington State for being a driver. We only really have one major pass to worry about, but we don't have beltways. First time I went to Washington, D.C., I was like, what do you mean I'm doing the same circle? This is silly. We don't have parkways. We don't have places trucks can't go. Yeah, so I like West Coast, but that's why I picked Washington. I grew up in the desert in California, a little town called Rosemont, middle of nowhere, right next to Mojave in the Mojave Desert. That's how deserty it is. Joined the Marines. One of the things I wanted was get out of the desert. And they put me in 29 Palms, Saudi, Kuwait, Bosnia, like everywhere where there's just dirt. Got out of the Marine Corps, looked at the whole country, and I thought, where does it rain? It rains in Washington and it rains in Maine. And I've read too many Stephen King books to ever want to live in Maine, so I moved to Washington. And then I drove here for years, and then became a cop here for years. And it's why my rentals are here. And if I had the whole country to look at and live, this is the one state where everything's not trying to kill me. It feels like the rest of the country is part of Australia. Hurricanes, tornadoes, earthquakes, poisonous spiders, poisonous snakes, like all the stuff that we just don't have in Washington. Personal opinion. Every state's got its benefits. Like I just took a month and traveled all over the country because there's all kinds of states I didn't get to go to. 20-something countries, been to 7 states up until this year. Finally got to go and see some states. There are some beautiful states out there. But this is where I ended up. So, yeah. Good night. Thanks for going back over the bartender advice. And thanks so much for doing all these live streams and videos. The knowledge is priceless. Awesome. And free. That's very important. Good night. Thank you again for amazing information. Everything is out of state employment-wise. Yeah. Good night. All right. You guys have a good evening. Until my next video, thanks for coming to my Dion Talk.